everyone, you should all be able to see and hear me. I've got some amazing trades for you right now. I am just setting up everything. We just closed a couple of good ones, which I want to show you later on. Put into the chat box that you can indeed see and hear me. I'm really excited. It's the first webinar I've done in a heck of a long time. I've just been really busy with a lot of things. And so I want to make sure that you can all indeed see and hear me. Put it in the chat box. It's going to be a great 90 minutes. Every single question you've ever had wanted to ask about trading, I'm going to answer every single one. And we're going to be here until it's all done. So this becomes the best education you've ever had. It becomes, it just becomes the last ever webinar you need to go to. Okay. So with that, let's kick off. I'm going to give you, like I said, I've got a whole bunch of new slides, got a whole bunch of great trades that we've done. Hello, hi everyone. You can all see me, so we can kick off. We can absolutely kick off. You should be able to see a little questionnaire up there. Will it be a hard no deal Brexit? If you can't see it, there should be a red box with 3 white dots about here, and that will help you find it. Okay. What I'm going to do now is going to start off with the first opening slide. Make sure it's up there. Let's see if indeed it comes up. It does. Yay. You should be able to see on screen. It should say trading strategies for Brexit and Trump. In case for some reason it doesn't, might take a couple of seconds for it to come on. Hi, Tom, Manjeet, Charlie, Pam. I'm not going to go through everyone. Richard, Thomas, Brad, Robert, Mike, Marguerite, the whole caboodle. Some familiar names as well. I love it when we've got familiar names in there as well. Welcome, one and all. Delighted to see everybody here. Okay, so what I want to do, we're going to talk through how should people trade now, obviously, because things keep on changing all the time. You know, it's confusing enough, but don't worry, I'm going to bore you with academia. This is about trading. This is about making money. Okay. You might have seen me in the press recently, in the Daily Express of all places. EU looks like a closed shop. Financial boss losing it on air in Fury TV interview. I'm going to give you the same degree of candidness, directness about what's going on, but this is about making money. It's not about my views on Brexit here or there or whatever. Okay, we're all divided on. It's not my views about Trump. It is literally about how we're going to make money and how we're going to make money from a whole load of instruments that we're going to look at. That all looks really complicated, like I'm about to launch an airplane to the moon. I'm not. I'm going to simplify things for you. Checklist for you all straight away. Close the doors, make sure it's quiet, grab a notepad right on top, making money, because when you come back to it in a month, if it says webinar, you're going to throw it away. Grab some water, make sure no one's using broadband except you, because if they are, this will buffer. You won't be able to see things properly, okay? And in the words of one of my mentors, one of the wealthiest traders in the world, who was in one of my first books, The Mind of a Trader, David Kite, we're here to make money. If that, and you know, when he said it, it didn't embarrass me. It's a really crass thing to say. We British people don't like to say that. I'm actually British Indian, but we don't like to say that. Okay, Indians like to say it even less, I think. Okay, we're going to be a bit American about it. We're here to make money. If you're not here to learn a skill, okay, you're in the wrong place. And if you're ashamed or embarrassed to say, hey, I want to make money. Some of the wealthiest people I know, they'd say to me, my job is to make money. That's what they'd say to me. Okay, so I'm not saying it's easy. It's not easy. I'm going to tell you the odds. 80%, as you know, lose money trying to trade the markets. It's not easy. If it was easy, everybody would be doing it. They'd be sitting on their backsides, doing nothing but trying to trade. 20% bother to learn the skills and make profits. Okay, it's an 80-20 rule. The great thing is the regulators are so heavily breathing down the necks of these brokers at the moment that the brokers now, out of embarrassment alone, have to keep it roughly 80-20. Before, they could screw you and they could have 90% losing money because nobody ever questioned them. Now the regulators saying, oi, 90% losing money, you're a fourth. They're keeping it about 80-20. Now you might say 80-20 is not good. Well, nobody's going to give you free money, are they? But 80-20 is better than I've seen it probably in the last 20 years. And trust me, I've written the Bible about trading. Don't buy the book. It's 20 years old. 20 years ago, I wrote this book, Trading Online, international bestseller, published by the Financial Times. So not just any rubbish publisher, okay, by me, and a big, fat, thick book as well. So trust me, I know this industry. I've known it for 20 years. I've never known it where the brokers have had so much pressure on them to make sure, because they've got to show it to the regulators, that they allow a certain number of clients to make money. And the way they do it is obviously it's the clients who've got to have the skills first. My job is to teach you the skills first of all. So first of all, yeah, that's good news. Okay. First of all, bit of information. I never used to call it a disclaimer, but I'm going to actually call it a disclaimer because then people go, "Ooh, it's got a disclaimer." Well, actually, in a way, it's not a disclaimer. What it is it's saying, look, these are my experiences and my opinions. All right. It's not my specific advice what you should buy tomorrow morning. Don't go and remortgage your house. I'm going to teach you broader skills so you can work out what you should do. All right. Rather than, Alpesh said, buy Australian dollars or Amazon or Tesla or Vodafone or whatever, so I'm going to just do it blindly. That's obviously not it. Okay, so amazing rules. You should have read all of these by, look, you should know them all by now, but in case you don't, they're all up here. Okay, and I want to make sure people are aware of it. So why do I sound a little bit excited? Well, first of all, I haven't done a webinar in absolutely ages, in a few months. Okay, hedge funds are winning big from Brexit bets, and we have people go, "Oh, trading, it's gambling." Well, actually, you can call it what the hell you want, but if it's making money, that's the way we're looking at it. This is the FT. They don't promote gambling as such. All right, so we're going to look, how can we do this in a reasonable, sensible, risk-averse way? Okay, a way which protects our downside. In fact, for those who've never tried, we're going to look at demo accounts. The people who've never traded, we're just going to make sure you decide at the end of this webinar whether it's for you or not. And the people who are really experienced, we make sure, how do we cut back those losing trades? And that's the main thing. Now, at the moment, we are being inundated right, left, and center. Right, left, and center. Oh, by the way, I'm going to end this poll. Will it be a hard no-deal Brexit? Well, 56% of you said yes, and 44% said no. You know what that tells me? Everybody's undecided. And let me tell you something else. I speak to the bankers. I speak to HSBC. I speak to Barclays. I speak to JP Morgan, Goldman Sachs, you name it, because we get their research. And they're on the phone to us because they want us to trade through them. They're on the phone to us. Nobody's got a clue what's going to happen. Okay, I'm involved with government. We're just trying to make plans. Nobody's got a crystal ball. So I've got to keep going. I've got to keep making money in this industry when nobody's got a bloody crystal ball. Well, in one sense, it's no different to any other time of our lives. I mean, when the credit crunch happened, nobody said, how come government didn't save me? How come the experts didn't see it? Government will never save you, and the experts never see jack. All right? We're in it for ourselves, so we've got to work out, well, how do we mitigate our risks? And is there money to be made? That's my job, to try and convince you we can mitigate risk and we can get into the 20% who can make money as a side income. Our goals, and on that piece of paper, I want you to write this down. Our goals, and my goals for every webinar, have always been really, really simple. I do not care what the forecasts of all the banks are. I don't have a crystal ball. What I care about is this. Our goals are to learn a skill to try and make 500 to 1,000 in income each month. Okay, doesn't happen easily. It's a skill. It takes time. Depends on how good you are at learning new skills. As a rule of thumb, the sooner you learn to drive, however much time it took you, that's how long it'll take you to learn this skill of being consistently profitable. You're not guaranteed 500 every month. Why do I only say 500? Because it's an easy goal. Easier goals are easy to achieve, and then we can scale it up. From 500, we can try and do 1,000. From 1,000, we can try and do 2. From 2, we can try and do 4. Okay, scaling is not the problem. I don't want you to try and jump too high, because otherwise, if you have losses because you're learning a skill, like driving on the motorway when you're a learner, you'll crash, you'll burn, and you'll think, oh, driving's rubbish. Everybody who drives is an idiot. Okay, so that's the first point. Small goals. Now, you might want that extra income. No, well, first of all, it's not guaranteed. Okay, some months you might make 1,000, others you make nothing. You even it out, and on average, we try and get to 500. Like I said, if you learn the skills to do 500, you can do 1,000, you can do 2,000, you can do 2,000. When I hire new people in my firm, and we're a small hedge fund, again, the hedge fund, well, we're tiny, we're minuscule, so we have to hire people who are cheap. In other words, we don't hire people from Goldman Sachs. I've got some of the staff looking at me. They usually piss off to the big firms. We hire them when they're straight out of university or college. And that means we've got to teach them to start with small sums, because they've never done this before. So I'm just teaching you the same way I've seen work within my own firm, okay? And I know it works, and that's why I wanted to get this across. I want to blow out all those people who charge you a bloody fortune to try and teach you. You don't need any of those people, okay? Because you can have a hedge fund manager teaching you right now. So 500 to 1,000 a month, and you might use it for, and I'll tell you what most people want that capital for. They want it for rent, mortgage, their children's education, or their children's rent or mortgage, or their pension. Okay, that is it. That is about 99% of all the people who ever come onto this, all right, area. So given that volatility is increasing, don't worry about what this chart says. What it is actually it's from JP Morgan. And what it's saying is volatility is starting to rise. And so people are getting worried. And as Brexit appears, we've got Brexit, we've got Trump, there's more and more volatility. Now people are saying, oh my God, you've got uncertainty about your own future, let alone trading the markets. So we're thinking, well, is this something we want to do? What do we do? My job is to say, right, volatility is good, as long as we know how to manage risk. I know you're going to think, Alpesh, why do you keep talking about risk and losses? If we can manage, it's like riding a wild horse. If we can manage that part, not fall off, everything else is easy. Okay, so I'm going to show you the strategies for that. One of the key reasons people trade, and let's compare this to investing. Okay, investing, this is Amazon. If it wasn't for Amazon, Apple, okay, I would not have a hedge fund. When we first launched our fund, back in '94, believe it or not, people were actually paying us money just to hold Amazon and Apple. They didn't know that's what they were paying us money for. We just found companies which were just skyrocketing. And we thought to ourselves, this is stupid. We're supposed to be hedge fund. We're supposed to look for things which other people can't, go short, go long. But you know what? It was just working. And the damn thing was going through the roof. Okay. That's nice. So I'm telling you the honest truth. I'm giving you an insight into what happens in this world. Often, experts like me get paid for doing bugger all. If that comes as a shock to you, that experts sometimes get paid when they really shouldn't, well, I'm sorry. Okay, now most of the time it isn't this easy. My point is, why do we trade? Okay, this isn't trading. This is 1998, 2002, 2006. It's now virtually $1 trillion. It is $1 trillion company. Okay, and it's taken $10,000 in 1998. Okay, when I wrote to Jeff Bezos and said, wow, what an amazing bookshop you have. This is great. I can get books I couldn't get elsewhere. To today, where that $10,000 is over $1 million. Okay, so my point to you is this, but that's investing. That's taken 20 years, right? The reason we trade is because investing takes too long. So I don't want to poo-poo investing. I'm just saying, let's be absolutely clear while we're trading. We're trying to make 100% return in a year. Okay, there'll be some years where we do, some years where we don't. All right, investing, we're trying to make maybe a 10,000% return like this, but over 20 years. I'm not saying one's better than another. I'm just telling you how things are. Now, as far as the markets are concerned at the moment, and this is research from Bloomberg and so on, listen, it's going to continue rising. People go, oh no, all this uncertainty, all this volatility, I'm really worried. Let me show you the data we get pulled in to us. Okay, year-on-year revenue growth. I'm looking at revenue and profits. I think the market's going to continue going. These are my favorite investments, my Amazon replacements into my pension. This is not trading. These are my investments. Let me run it down. Take a picture if you want. Get your phone, get your camera phone and do this, okay, if you wish. That isn't my point. My point is, right, this is investing. This is going to be held between 3 years. When you're investing, you're looking for 100% return in 3 to 5 years. When you're trading, you're looking for it in a shorter time frame. So why doesn't everybody trade? Because it's more difficult than investing. Investing, it's easier. You find some good companies like this. These are rated out of 10. They're all American stocks. I love American stocks over British ones because they tend to make a greater profit for me over a prolonged period of time. Now you might say, well, wait a minute. What about when the pound rebounds and all the rest of it? Currency neutral at the moment. Okay. Now, like I said, you can take a picture if you wish. Don't panic. I'm going to show you, for all of you, stay to the webinar to the end. I'll give you all of this information for free anyway. So don't worry. Okay. And why I've chosen these companies and why I've removed some of them is I don't want companies too big. I don't want companies too small. I want companies which look like Amazon did or Apple did in 2011 and in 2004. In other words, they've got strong revenue growth, strong profitability. They're relatively undervalued. They're not too big. They're not too small. Okay. And so that's the number. I'm not going to go into detail on this. The point with this is I just want to make it clear. Investors, they want 100% return over 3 to 5 years. Traders, they want to try and get it in a year. That's the difference. Why everybody doesn't trade is because it's a bit more difficult than investing. Why is investing easier? Hey, find some good stocks, hold them forever. Everybody knows that. All right. So just wanted to clear that mindset with you. And we're here for the right reasons. We want to make more money sooner, but we know we've got to learn a new skill, right? When do people trade? We polled 100 people. They're getting it wrong. Everything you think about trading, you're getting consistently wrong. My point in this webinar is to make sure you know that. Trading for 1 hour or more after work, which is what the majority would do, it's way too long. Okay, 1 hour or more throughout the day, bit long. 18% were saying 1 hour or more before work, a bit too long. I want to try and narrow this down to about 15 minutes before and after work each day, or 1 hour just on Fridays. And the reason for that, and I'll explain it, is this: the longer you're in front of a screen, psychologically, the more you suffer from something called confirmation bias. The more you start believing, because you've invested so much time, that you've got to trade. Or, put in simpler terms, you'll also trade out of boredom, and you'll trade because you've invested and you've anchored so much time, okay, into something. So I got to cut back some of your time. But there's another reason. The biggest reasons you think you can't make it in trading, all right, and you all become investors and just easily buy something where you could be making more money trading, is this. First of all, you think you don't have enough money. Money is not a problem. If you can consistently learn to profit, say 500 a month, trust me, if you can consistently make 500 a month and learn the skills of it, do you think anything's going to stop you getting more capital? You'll find it. You'll find it from like our different friends and family. They'll find you, okay? People think they don't have enough time, so I'm going to teach you the process by which we reduce time, like I said in the last one. And then no good, simple strategy. I'm going to show you what you should be doing to make that strategy really simple, stupidly simple. At the moment, people are too complicated with their strategy. I'm going to show you all the things they're doing wrong, okay, which we professionals know they're doing, and I'll prove to you that we professionals know these people are doing it wrong. However, I don't want to come across as arrogant, and I put this image before in my webinars. The humble truth is, this is how trading was for me. I started off the same position as you guys. I was at university trying to make ends meet. I used to clean toilets on the side so I could have even more money to invest with. I told you, if you're consistently profitable, you will do anything and whatever it takes to earn side income. Okay, so when I was at university, I learned to be trained to be a lawyer. I'm a good Indian family. Either you're going to be a lawyer, an accountant, or a doctor. Okay, you've got no choice. Then I said to my parents, I said, look, I want to trade. I want to trade full time because I'm good at this and I can prove it. But you know what? It felt like this. It felt like banging my head. And if it does to you, don't worry, because that's the humble truth. My job is to compress everything I learned in the last 20 odd years since I've been doing it full time into this time frame. Okay. Into this shorter time frame. Okay. So that you don't have to go through it. So you get 20 years worth of knowledge from all my 18 books, from my 10 years as editor manager and everything else put in. It took a lifetime to be good enough to be able to hang out with the Duke and Duchess. Okay, I don't hang out with them every day. It was a one-off, but I'm just saying it took a lifetime. I want to compress that for you. All trading is, and what I've got to show you is this. We're going to turn, imagine something's at 100 and you think it can go to 120 and it might go as low as 80. If you did 100 of those trades, okay, 50 will actually go up 20 and 50 will go down 20. You'll have a net return of 0. All trading is not about trying to be right all the time and the holy grail and trying to find a crystal ball. That's bullshit. I know it's bullshit because George Soros isn't right all the time. If you read his book, okay, The Alchemy of Finance, I don't suggest you do it, but if you do, at the back there's a diary and you will see that he is wrong more often than he's right. Okay, all trading is about is trying to be right a bit more than a coin flip, 50-50. Why? Because it eases the pressure on us to be right all the time. Wouldn't that be brilliant? All those people who tell you, oh, I'm right 93% of the time, I've got a secret system which is correct all the time, they're lying. It's bullshit. We know that because I'm telling you from the industry. I'm a regulated fund manager, and I know that most fund managers are right 50-50. It's just that when they're right, they make a bit more than when they're wrong. And look at this. So if you can just improve with a bit of skills and what I'm going to teach you to be right 60-40, guess what? You've got a net return of $400. Perfect. Okay, there you go. Simple as that. And that's all we're going to try and do. We're just going to try and be a little bit more right than wrong. Put in other terms, I'll put it like this. My friends, I will put it like this. Imagine there are 25 trades you do per month. And I'll show you how to break that down, how to find them, what to scan, what to look for, how to put that into a proper business process, 15 minutes a day, so you can scan through 16 odd products for 15 minutes a day. Find one trade a day. Don't write all this down. I will give it to you in numbers later. So we really break down the numbers so it gets specific, okay? Let's say you're losing at most 1% on any one trade, okay? And I'll show you how to make sure that even with a small amount of money, even with these new ESMA regulations, how we can still trade, okay? And say you have, out of those 25 trades, 15 win, and they make 2% of your total capital. All right, so obviously you're going to pick a strategy where you make more when you win than you lose when you lose. And therefore 10 will be losing. Look at that, 10 whole losing trades. Okay, that's fine. That's fine. I'm happy when I've got losing trades. All right, because it tells me that's real life, and that's fine. All right, because I've got this far, and so have the biggest, wealthiest people in the world. by not trying to be right all the time, but trying to maximize their profitability. Okay, so 10 losing trades, they lose that. Well, then we've made 20%, 30 minus 10. I'm just giving the maths really simple for now, okay? And if you just have as little as £2,000, I know some of you, and you can write it in the chat box where you're from around the world. I know most of you are from the UK, but I know I always have a lot of people from Canada, America. We sometimes get Singaporeans and Australians who are up very late or very early to watch my webinars, but feel free to put it in. Okay, I also want you to tap into the chat box. Any questions you have, ask me about brokers, ask me about educators. I'll answer all those as we go along and probably at the Q&A at the end. Okay, if you have 2,000, then you've just made £400. Let's get conservative and pessimistic. Say you don't make 400, halve it. Let's say you only make 200 in the month. Okay, well, that works out at a 100% return per annum. That's all we're trying to do. We're trying to keep the maths really simple, be pessimistic, have lots of losses, have lots of losing trades, and then be pessimistic. That's what we're trying to do. Bristol, Portsmouth, love it. Robin, UK, Netherlands, Tom, wonderful. Okay, that's what we're trying to do. So rule number one, we do not gamble around news. There's a lot of ways to trade. I'm not saying you can't try and trade around news. Don't do it. All right, I don't try and gamble around news. You know why? Because the guys at Goldman Sachs have got 1,000 analysts around the world whose job it is to try and work out which way non-farm payrolls are going to go. Do you really think on the internet you're going to be able to do that? No. So we're not going to try and gamble around news. So Alpesh, if we're not gambling around news, then what the hell is it we're going to do? Okay. By the way, in this webinar, whenever you see the down red arrow, that means our system gave us a sell, and I'll show you how we get those. Okay. All right. That means we're going short. In a way, it doesn't matter what we're trading. This happened to be sterling US dollar, but I'll show you products and timeframes. And we're not just going to talk Forex, gold, oil, indices, cryptos. We're going to do the whole lot. So don't worry if you're a beginner. Hey, Claude, Montreal, Canada. Bonjour. Or bonsoir, I guess, at the moment. Now, really important this. We are going to learn to trade in a way where we don't need to worry about the news. Because you're at a disadvantage as a private investor trying to work out the news, aren't you? Okay, you're going to be at a disadvantage. We've got to play to our strengths, not our weaknesses. I am not trying to make you into hedge fund managers. I'm not trying to make you into Goldman Sachs traders. That's different. Goldman Sachs traders, okay, get to move the bloody market. There's no point in me trying to teach you how to be one of those. I've got to teach you how to be profitable retail investors who are at home with limited time and resources. No point trying to teach you to be something that you can't be, okay? So don't worry. And do you know what? You're in a good position, so don't worry about that, okay? All we're trying to do with this, look at this. Could be any product. The green arrow means to buy. Why did that come up? I'll explain later, okay? And the price goes up, okay? Now, you, me, George Soros, and anybody else, we all see, thanks to the power of the internet, pretty much the same prices regardless of which broker we use. So I'll tell you which brokers I like and which ones I think are charlatans are going to rip you off. Okay, Willem, welcome from South Africa. Our British Prime Minister was just there. Clark from New York, love New York. Okay, trader one, private investor makes £500. From the same trade, he gets the same data as you and me, has to make the same two decisions as you, me, George Soros, and the billionaires. Okay, which is when do I buy, when to sell. You, me, and everybody else only has to make two decisions. So how come 80% still lose money? I'll show you why they lose money and who does what to make the money. Okay, trader two, wealthy trader, obviously they've got more capital, they'll make £5,000. The professional fund manager will probably make £200,000 because they've got even more money. And trader four, major big bank, might even make £1 billion, who knows? Okay, but they've all got the same two decisions. When do I buy, when do I sell? They all see the same data. So I want you to realize that and be optimistic about it. You, me, and everyone else is going to see the same data, give or take, okay, on euro, sterling, and we still got to make the same two or whatever else we're going to look at in this webinar, right? We just got to move and work out when to buy, when to sell. All right, I know I'm making it sound simple. Don't worry, it gets a little bit more complicated than that, and you're going to need the pen and paper to write it all down, but don't worry. One of the reasons, you know, when I said in this webinar, I said Brexit, navigating Trump, I got bad news for you. It's not just about navigating Brexit and Trump and volatility. No, this is what Deutsche Bank, that's Deutsche Bank, these are the 30 risks to the markets in 2018, according to Deutsche Bank. Okay, I'm not even going to go through each one. Now, I can bore you to death on every single one of them. Trust me, I've got a master's degree in economics and politics from Oxford University. I can bore you to death on the politics and the economics of this. And if you don't believe me, trust me, I bore people to death on the BBC regularly, and you might even have seen me there talking about all of these things. Here we go. All right, talking about Brexit and all the rest of it. So I can talk about these things. until the cows come home. But that doesn't help you learn the skills of when do I buy, when do I sell, when do I make money. You know, people, they love stories. So they love somebody like me saying to them, hey guys, you know what? I think you should do this, you should do that. And they go, oh, Alpesh said I should do that, I'll do that. What about when I leave here tonight? Okay, how are you going to learn to fish if I throw you fish all the time? I'm going to show you what trades we've got open. There's 16, there's more, there's 17 actually that we've got going on at the moment. We bloody love them. Not just me, because I can't monitor 17 positions myself, but my team. Okay, so we've got it all 7. I'll show you every single one of them, from silver to sterling to euros to Tesla to Facebook to the Dow to FTSE. Why I love Australian dollars, why I love DAX. I'll explain all of that. And Apple. Anyway, I'll show you all of those in a second. My point is this: 30 risks that we're supposed to navigate. I can't look at this every day. It's all right being a big bank and saying it to the wealthiest clients. You know, North Korea, US equity correction, valuation fundamental mismatch in US equities, blah, 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 Brexit develops, new government in UK. This is what Deutsche Bank said. This is what Deutsche Bank put down, Deutsche Bank Global Markets Research. Okay, so you can see it here. Even down to UK local elections, Irish presidential elections, UK reversing Brexit decision. That's a lot of stuff. We've got to trade it in a way where we don't have to have a master's degree in economics and politics from Oxford University to try and decipher the market. If you have it, that's fine. That's one way to trade. I'm saying we've got to find a way which doesn't do that. We've got to make it easier. So I'm going to narrow down the ways in which I want you guys to trade. Okay. Mike is brilliant. Mike said in one of those 30 risks, why is Deutsche Bank not in it itself? Mike, you're a shrewd cat, and you're absolutely right. Given bank stress tests and Germany, I like it. I like it a lot. Which is going to tell us the conflict of interest that comes out from banks anyway. Okay. Trevor's asked the question. I'm going to put this up. Trevor asked the question, what's the likelihood of Trump being impeached? Guess what, Trevor? I'd already prepared a poll to ask all of you. I'm going to share the poll results. Keeps it interactive, keeps it exciting. Okay, so how are we going to trade then if we can't do those things? All right, well, one of the key things we're going to do, we're going to have to pick from a lot of choice. That's the first thing. And this is what I'm going to, don't worry, I'm going to show you the numbers. I'm going to show you everything you can see. I set up my screen like this. I like to get, for private investors like you, I like you to have your data for free. Never pay for your data. Never pay for your charting software. Never pay for the data feeds. Okay, so things like MT4, don't worry if you don't know what it is. It's free. Many brokers offer it. So it's broker independent. You can get it from one broker and trade on another broker. You see what I mean? And we'll talk about brokers and all of that, but you can get all of this data for free, for life, forever. Okay, many brokers offer it, and I'll show you more about that later. Okay, what I like about it is it's easy to monitor a lot of live data, and you've got not just currencies, you've got stocks, European, US, UK, cryptocurrencies, all the rest of it. Now you might say, oh, different brokers offer different ones. That's fine, we'll come to that. My point is, if you have choice, and this is critical, Thomas, I'll answer your question on cryptos later. If you've got choice, okay, if you've got choice, right, then you can pick quality over quantity. And that means I want you to, and write this down. I'll give you these numbers later. I want you to look at 16 to 20 instruments for 15 minutes a day. We scan them and we look for the trends. For instance, at the moment, Euro US dollar. Okay, Euro US dollar. Now you can see, I'm going to put this up. I'm going to show you which ones I like. Don't worry, I'm going to go through it. I know it sounds like I'm going through it quickly. That was a buy signal. Okay, it's come off a bit sideways, but don't worry, because before that, whoops, here we go. We had the buy signal there as well. So we've been long on euros for a while. Well, actually only until, what is that, August 15th, Indian Independence Day, victory in Japan Day, for those who know their politics. Euro US dollar since it, and it's been riding up a fair bit, and that's fine. Okay, I just want to have a look at, whoa, where are we? Let's go to where we are at the moment on that. We had a downtrend, it didn't do much. We're long on it at the moment on the 15 minute. But anyway, where are we? Let's go back. Okay, so we had a long on euro dollar, and we're still long on euro dollar. And you might say, what do you know about euros and dollar, Alpesh? I don't need to know. I'm going to follow my entries based on trends. Well, how do you find those trends? I'll come to that. That's the entry part of the webinar. Okay, I'm going to show you simple ways for private investors to do it. What I want you to do, 15 minutes a day, you scan, and I'll show you how you can set up your screen. All data is live, real-time, free for life, offered by many brokers, so don't worry. part of the things I used to do when I wrote my Financial Times column is show people how to save money by getting data and things like for free. Okay, so we're going to scan it. Why just 15 minutes? Can I make enough, Alpesh? How much can I make? I'll show you that in the business plan stage of the webinar, that actually you'll get a better return on time, you'll pick better quality trades, the right balance between size of move and frequency of trading. If you trade too often, the moves are too small and you're spending too much time, so you get a low return on time. If you trade too infrequently, you're doing too few trades, putting too much money in them, and they might not pan out. So there's an optimal time, there's optimal products. Some products are more trending than others. Why do I like Australian dollar? Okay, Swiss franc. I didn't know I did. I find the trends. That's my job. There you go, down arrow to short. Okay, but we had that trend was wrong. Alpesh, you told us a loss. Yeah, it doesn't matter. You know why? Because look at that winning trade. More than makes up for the losing trade. So what are these lines here, Alpesh? Well, the red arrow tells me when to sell. I'll come back to all of this later. The dotted line is not a profit target. The dotted line, because remember it's a short position, so the profit targets are when the market falls. That's not a profit target. That's when I double down the position. Why? Well, you don't cap profits. You don't say to yourself, I've hit my target. Because what if it continues making more and more money like that did? The yellow is a stop loss, and I'll explain how we knew where to set it. So we didn't get stopped out by noise, but it was just at the optimal level. I'll come to all of that in the stop loss section. Okay. Bitcoin, I got to show you Bitcoin. We only ever do shorts in Bitcoin. Now you might say, oh, Alpesh, you bastard, you hate cryptocurrency. It's a bit like talking about Brexit and Trump. Everyone's so divided. No, I don't hate it. All I'm saying is, when it comes to making money, I am neutral on everything. In other words, with cryptos, I love shorting them. Why? Well, because I think it's a bit easier than going long at the moment. Okay, so this is crypto, this is Bitcoin against sterling, and we're short on it on the 30-minute bars. Okay, at the moment, you can follow this. We'll follow this live during the webinar. Don't worry, we're going to follow all of this. I'll explain what these mean. Okay, and like I said, how do we know when to add to our position? How do we find this? And we're only picking one trade out of 20 each day. Okay, so we're just looking for when we get in, when the trend starts. Now, it might be that we happen to look at the computer screen when the trend's not started. That's fine. We'll miss that trade. It doesn't matter. You're not trying to get every trade. You're trying to get 1 out of 20. You want to be looking at the screen when the trend starts. How do we find when the trend is? That's in the entry stage. This is Amazon 30-minute bars. Absolutely love Amazon. We're long at the moment. Okay, so we exited there. That was from 17th to 23rd of August. It was a short trade which didn't work out. Yeah, losing trade on, but long trade, and look, we doubled down there and the long trade. Now you might say, well, it doesn't take a genius, Alpesh, to go long Amazon. Fine. I don't care. I'm not looking for accolades. I'm not looking for you to say, oh, you're a genius. Well done. I'm just looking to show you how money's made. All right, and how it's, more importantly, not lost. Not lost. That's a lot more important than how it's made. All right, I love how we trade. Okay, I love how we teach and show people how to do it. Okay, so I'll show you how to get these entries, how to work out the stop loss, how we know when to double down. But this is a lot better than trying to look at news all the time. Why? Because look at all the bits I've already told you. Limited amount of time in front of the screen, lots of choice, and you can pick from a lot of, like I said, choice. FTSE 100, where are we at the moment? That's going sideways at the moment for us. However, so it's not doing much. It's actually underwater a little bit, but we had a good little short trade earlier here. Whoops. Let me draw that in if I can. Come on. No. All right. Yeah, that's why. My mouse needs to be here. Right. Now, actually, how come before it fell off a cliff, did we know to go short? What was it that the price was doing? I'll explain that. I'll explain how you can analyze that for yourself. So you can put the odds in your favor from being 50-50 to 60-40, likely to make it. And when you're right, you make more than you lose when you're wrong. Okay, all these bits will fall into place. So that's the FTSE on that one. But what's interesting? Oh, there was Tesla. I've got to show you Tesla. Now, Tesla's been in the news. Now, some of you might say, I don't want to do US stocks. I don't care what I trade, as long as I think it's going to make money. So you had Tesla come up here, and then it shot up, okay? And then we had the short trade, and currently short again. Tesla. Now, you might say, well, I don't know what you're going to say to that. All I'm going to say is if it's volatile, now remember, volatile, like Elon Musk, I like it. Why? Because we realize humans are rubbish at trying to change their minds. A human cannot go from being long something and loving it 1 minute to hating it the next and shorting it. And look what's happened during that period. The price has gone nowhere. It's back to where it started. But we made money on the long and the short. Okay, so we have to have a process which is a simple process where we go, right, if it does this, like a sausage factory, then I will buy and then I will sell. So don't trust your emotions, trust your algorithm, trust your rules. Okay, don't trust your emotions. Rules are better than experts. You know, when they did this with doctors, they did a whole load of rules to work out when an x-ray tells you you've got cancer or not. The doctor who created the rules were better and more accurate than the bloody doctor who created the rules. In other words, humans are rubbish. Don't trust yourself. Trust the rules that you're going to make. I'm going to tell you what the rules are so we can find it, goes up. And you do this with a day job because guess what? You're going to look at it for 15 minutes before and after work. If you miss this, because whilst you're at work, it already happened, fine, you missed the trade. But Alpesh, what if I've opened the trade and then I go to work? How do I exit? I'll show you how we can exit doing that. What if I do want to sit at the screen all day? Well, that's fine. I'll show you how to exit and watch the screen. If you want to be a screen slave, it's up to you. My point being, this is a far better way for a retail investor to trade than any other that I've ever seen. Anyway, that was that one. The Dow's fallen off a bloody cliff again. Gone up and down. So we had it riding up. It's fallen back down. We've gone short at the moment, but a nice little short run there. Whoops, we had a nice little short run there on the Dow as well. So it's been a bit mixed. It's been a bit up and down. Sterling's been phenomenal at the moment. Loving sterling. Why? Well, you might get wrong-footed now and again, like this one, which was wrong-footed. That's fine. That's fine. That's real trading. Guess what? Then you get the short trade. Then you get the long trade, and look, how come we got in? That isn't me saying now, oh, that's us knowing the trend's about to start. So how do we know when the trend's about? How do we know when the banks are about to put more money in? Well, you'll notice we never get in at the bottom. We didn't get in at the bottom. We got in after the market moved a bit. How do you know when it's moved a bit, which is worth getting in and not getting in? I'll explain that. Again, zero here. Look, zero on the short, but on the long, we're back in. And it's in the money at the moment, a little bit, nothing to write home about. I mean, nothing to write home about, but it's in the money. But the best one was that short and then that massive long trade. Okay, and that's why we're excited. So we're excited about it for the moment. Sterling against yen. Sterling against pretty much bloody anything at the moment, actually, is providing smooth trends. Sterling, again, it's pretty much similar trade to the last one. And but short sterling against the yen at the moment. Remember, the last one was long sterling. Guess what? That's a hedge. Long sterling in one currency, short sterling in the other currency. I've just hedged sterling perfectly. Didn't even realize you were doing it. Do you see how? Okay. So yeah, the names are up here. Sterling, yen. Sorry if you couldn't see it. 30-minute bars. But don't worry, I'll go through all of this again if need be. But I just want to let you know what we're doing at the moment. But more importantly, what you should be doing, so I can teach you what you should be doing. Now, we'll come back to this later. We'll come back to Australian dollar, Facebook, and all the rest of it. My point is this. Okay, Alpesh, you left us at rule, that earlier rule. Okay, choice. We're looking at all of these for the reasons of choice. More choice means you need less time in front of a computer, means you can have more quality trades because you can be really picky. That's just logic. It's common sense. Okay, and as a private investor, you're going to need more choice. Now, by the way, let's take an aside. Will Trump be impeached? Ending the poll? No. Is the Teflon Don? I happen to agree. I just don't think he will. I just don't think he will. I think he can say anything and do anything, sadly. He can say he sexually assaults women, and it's fine. Anyway, enough of that. 83% of you said, no, you don't believe he will be. He will be. Okay, let's look at another quick poll. Okay, going to do another quick poll while I move forward. So, rule number 4. We're going to have to, in this webinar, have a process which saves us time. Okay, for the reasons I've already mentioned. Rule 5, copy what the winners do, right? I'm going to show you what my mentors taught me. When I wanted to start trading for a living and leave being a barrister, my family said to me, that's fine, as long as you tell us that you've been taught by the best in the world. And I thought, well, how am I going to meet the best people in the world? So I went to the Financial Times and said, I'm going to interview 10 of the world's leading traders. And I said to 10 of the world's leading traders, if you agree to be interviewed, it'll go in my book. Okay, so I got to meet 10 of the world's leading traders. The Financial Times published the book. Don't buy the book. I'll give you the best bits in this webinar. Okay, if you watch to the end, I'll give you all the best bits so you can download them and all the rest of it as well. So don't worry. Okay, so what happened is I met them all and they mentored me, and then I set up the hedge fund. Okay, and the whole story is published by the Financial Times in my books, semi-autobiographical. Okay, and the FT are great as a publisher because they're credible and all the rest of it. You want somebody telling you who is a hedge fund manager. All right, you want somebody who are the leading ones in the world. Don't just pick people off the internet. Never trust a broker to teach you anything. The guys, they're a brokerage, for God's sake, okay? Why are they not running a fund? Why are they not regulated? Okay, why are they not running their own money? And why are other people not trusting them to do it? And why they're not in a regulated position to do that? You've got to ask the obvious questions, okay? So that's the point I want to make across. Copy what they're doing as I did. Everything I'm teaching is just copying what people who are profitable and successful taught me personally and directly. All right, rule number 6. What we're going to do is, because it's a volatile market, we're going to learn how to place a stop loss based on the volatility of the market. Remember I said Trump, remember I said all those risks, I said Brexit, I could have said a whole host of other things. The way to trade now, as the webinar was called, the way to trade now, Earth G and K, no worries, welcome, all good with family, thank you, my friend. The way to trade now is to really focus on how to put stop losses, because the market's more volatile, as I showed you some of the data earlier. So we're really I'm going to show you the stop loss part, okay? Because again, if you can protect the downside and get out of those, guess what you're left with? If you learn to love your small losses, write that down, learn to love your small losses, all you're left with by default is trades which are just going up and up and up, okay? Because you've learned to love your small losses. Guess what private investors do? Psychologically, because of psychological biases, and I used to lecture on this as a visiting fellow at Corpus Christi College, Oxford, I used to lecture on behavioral finance, okay, before a chap called Amos Tversky and Daniel Kahneman won the Nobel Prize in 2001 in economics. So I used to lecture on this area on behavioral finance, which is if you behave like a regular private investor, you'll take small profits because you're so scared. Okay, it's called prospect theory, if you want to learn more about it. And you'll let your losses run, or you'll add to your losing trades until all your money's gone. It's human nature. So we've got to reverse that. We've got to show you how to do the exact opposite, okay? Exact opposite of that. Rule number 7, will I lose sleep if I lose? That's how you decide how much money to put in a trade. You work out where your starting point is, where your stop loss is. I'm going to get to specifics because I'm going to show you the business plan and the trading strategy, so don't worry. I'm going to get to specifics. Okay, people say, oh, you should only lose 1% or if your stop loss is hit. Bullshit. Anybody who's ever told you that has read my books and misunderstood it. I put that in my books 20 years ago. Okay, and they copy my books and then they charge you a fortune in all these trading courses. They charge you £3,000, £5,000. The worst way to learn is through an expensive trading course in some bloody classroom where they ask you to get train fares, sit in a hotel room, and then they leave you forevermore. Okay, not good, not a good way. Okay, you should have somebody, you shouldn't be paying something every week, every month, every year, and you shouldn't be paying subscription fees. What you should be doing, is saying, okay, if I have a loss, right, how much can I lose? Will I lose sleep over that money? And it's often a lot less than 1% of your total capital. You might say, well, who uses 1% then? You mentioned it in your own books, Alpesh. The people who use 1% rule are hedge fund managers, professionals. Before that, you just work out, well, if I lose £20, will I lose sleep? If I lose £100, will I lose sleep? If I lose £1,000, will I lose sleep? You'll all have different figures. You've got to work it out what it is. And you know what the fun thing about trading is? Nobody's switching off the markets. Start small. Start with, oh, I'm only going to lose £10 if I get it wrong. Start small. The education you have from losing £10 is the same as you have from losing £10,000. Okay, it's all the same. All right. Rule number 8: do not try to be perfect. Our job is not to be right 100% of the time. It is just to be right more than 50-50. Rule number 9: these are 4 things we're going to learn. Okay, and I want you to write this down. Okay, Fred will take care of you. Don't worry. Drop me an email. I'll make sure that we give you the details. SEMA. Stops, entries, money management, and when to add to winners. Those are the 4 simple things. I used to call it SELMA. I call it SEMA because I made it even simpler. Okay, SEMA, S-E-M-A. It's all you got to learn, and I'm going to break this webinar into those bits. All right, rule number 10. We're going to follow the trends which are made by others. All our job is to follow what the banks do. Let them move the market, then we get in on it. We're not trying to be outsmarting them and trying to get in before news, because that'd take too much energy and effort. We can't do it. And the way we're going to put the odds in our favor is we're going to look for so many multiple clues that it's likely to go in our favor. Not just one, not some holy grail. Okay, there is no holy grail. We're just going to try and put the odds in our favor by filtering, and I'll show you how we do that and how we do it quickly, efficiently. So when you look at this, you can look at it quickly like I can, and over just a few minutes, you can say, right, yeah, we're going to short short silver. This is what silver against US dollar is, 30-minute bars at the moment. And look at that, it's pointing all the down way. That's good news, okay? So my point is, how do we find those trends? And by the way, I'm not the only one doing this. Oxford University is actually even telling people the global algorithmic trading market will expand by a compound annual growth rate over 10% by 2020, according to market research. Everybody's following computers. Everybody's using computers to the point University of Oxford and Said Business School, their business school, is teaching it. Okay, if you don't think this is the way trading is going, you're getting wiped out. The reason you're in the 80% who are losing money is because you're still trying to do it the old way while everyone else has got automated. So I've got to teach you how to, it's David versus Goliath. I've got to teach you how to use the advantages you have as a David. You see, Goliath's like Goldman Sachs. They've got super fast computers. We don't. So we're not going to do hundreds of trades in a day because we don't have super fast computers in the time. They've got inside information because they've got analysts to provide it. We will not compete on our analysis of the market. Okay, we'll compete on theirs. If you can't beat them, join them. We'll let them move the market, then we'll ride their coattails, and I'll show you how. Big money can move the market. So we'll not try to guess which way the market's going. We won't try and guess it. We'll go with it once it's moved. They have massive teams of analysts. We'll not compete our analysis with them. It's as simple as that. Our advantages, okay, are we do not have to trade if the trade looks bad, because we're not in a job where somebody says, you must trade. Why did you not trade today? There's no pressure of a boss telling us when to trade. We make our own rules. We can be small and nimble, choose what and when to trade. We can start small and build it up, okay? People forget those advantages they've got. Now, I said SEMA. Well, I also said SELMA. Okay, stop losses. SELMA stands for stops, entries, limit orders, or take profit. We're not going to use them. Mind, trading psychology. Okay, money management, and when to add to positions. One of the most important things I can teach you, okay, I'm going to teach you the business plan and how we know when to enter. But before we get to how do we know when to enter, I'm going to show you how we set something up. All right, this is how we set it up. Doesn't matter what the trade is. Look at this one. All right, we are going to look at entries. How do we know when a trend has started and we should get into it? Okay, Pam, I'll come to that brilliant question in a second. All right, Pam asked, how do we know how many trades to have open at any one time? And I'll come to that in a second. Okay, when I know when a trend started, a good system doesn't mean you've got to be awake at 4 in the morning to be looking at it. It should be that there is a zone in which you can buy. Hans has asked, am I selling something? Yeah, there's loads. I'm selling silver. Look, there you go. Short. The red down arrow means it's going to fall, going short. So that's to sell. Okay, shorting silver over there. And I'll come to some more of the longs and shorts. I thought I had ones earlier. Long euros. Short Australian dollar, okay? Short Australian dollar against Swiss franc, long euros against dollar. So there's a whole mixture. And remember what I showed you with sterling? Sterling against Canadian dollar, long. Sterling against Japanese yen, short. What a perfect hedge. Whatever happens to stay, to neutralize that, hedge that. But anyway, so when we have our entries, I'm going to show you, we have a zone in which we're going to buy. Okay, we have a buy zone, my friends. All right, now you need that. Why? Because when you're looking at the markets over a 15-minute period, you want to have had ample time. Anybody who ever tells you, oh, you didn't make a profit because you didn't enter the trade in the microsecond it was supposed to be, that's not a robust strategy. When we as a hedge fund go to professional investors, so we are investors of pension funds, sovereign wealth funds, family offices, when we go to them, they look and break down what it is we're doing. Obviously they do before they give us money. And if we said to them, oh, we have to be in front of the screen 24/7 and we have to be right there, they'd say, well, forget it. Because if you miss that one trade next year, how can we know that your results are replicable? They're looking for replicability. And I say, well, we don't. We can look over a period of time and have ample time to get in. And they say, oh, good, you've got ample time to get in. That's good. That's a robust strategy. Okay. Our stop loss is volatility based. This is the most important thing I can tell you. Trump, Brexit, those 30 Donald Trump, those 30 Deutsche Bank related risks, our stop loss is volatility based. What does that mean? If I don't teach you anything else in this, and I'm going to teach you how to know when to enter the market, if I don't teach you anything else, this is the most important thing. Please write this down. Okay. What that means is a stop loss, and you got it's probably the biggest secret of hedge funds. There's two big secrets of hedge funds and professional traders. One is VSL, volatility based stop loss. Write it down. What that means is the more volatile market, remember that's an entry point, then the further away the stop loss. Okay. How do you know when the market's volatile? What we do is we observe how much is it moving up and down in each period. Okay. That oh, Alpesh, that means you need a magnifying glass. No, don't worry. I'll show you how you can do this on computers for free. Okay, we look at the volatility, and we might, because that's noise. We don't want to be stopped out by noise, and we might put this 2 or 3 times further away. Or we might say, no, I'll put it at a recent low. Or we might say, this is my experience. I'm so experienced at this, I know where to put a stop loss. Okay, but the more volatile the market, the further away the stop loss. I might say, hang on, Alpesh, then I'll have a bigger loss when I have the stop loss is further away. No, because the second secret of all wealth-making hedge funds is this: volatility-based position sizing. What does that mean? That means if the stop loss is, say, twice as far away because the market's twice as volatile, the position size is half as much. In other words, wherever your stop loss is, whether it's here or here because the market was less volatile, or down here because it was more volatile, if it's hit, you make the position size such, the amount you start trading with in that position, such that you don't lose any more money. You always lose the same amount, whether it's a small short lot stop loss or a further one. You know what the beauty of that is? The ingenious thing of that is the small tactic which makes all the difference. Because remember, you, me, and everyone else is looking at the same buy and sell decisions, the same data as anybody else. You know why that tactic is better as a technique? The reason is you can start with a small position, okay, and know that if the market's more volatile, your stop loss will be further away. You won't get stopped out by noise, but you won't be risking losing more money because your position size will be smaller. Now you might say, well, hang on, if I've got a smaller position, what if the trade moves in my favor? Well, if it's more volatile, it's more likely anyway to move in your favor as much as it is to move against you. So you will, with a smaller position, still likely make as much as you would have done with a bigger position in a less volatile market. I won't go into the mathematics of it all, but you'll have to trust me on that. The third thing, so volatility-based position size, volatility-based stop loss. The third thing is, therefore, what's this? What's this dotted line? That dotted line is a mirror reflection of where the stop loss is around the entry point. It's a mirror reflection on the opposite side. That's where we double down on our position. Alpesh, why are you doubling down on your position? Winners add to winners. Write that down. Losers add to losers. Never add to a losing position. If you want to know what some of the best hedge fund managers in the world taught me, they said never add to a losing position, only ever add to a winning position. Okay, so I'm going to show you why. The reason is we can start with a small position knowing that if it gets into profit and hits that point, and you can always tell your broker, oh, my stop loss is at this point, because you'll have calculated it. You might have used the average true range or other methods, which I'll come back to later. Okay, and you'll say, I want entry now, I want a stop loss here, and therefore I want to enter again if the price hits this level up here, because then you'll be in profit. You started with a small position. Once you're in profit, you're then risking profit, not your original capital, to make even more profit. It's better to risk profit to make more profit than to risk capital to try to make more profit, obviously. Okay, it's one of the sneaky tricks that wealthy people have. When they make money in something, wealthy people, guess what they do? They continue doing the bloody thing and reinvesting in it. You know what poor people do when they make money in something? They take a little bit, they forget the fact that it keeps on making more, and then they look for something else completely different. It's a ridiculous psychological phenomenon, but it exists. You know what rich people do when they make a loss? They take a quick small loss. You know what poor people do when they make a loss? They put more good money after it. They borrow money on their credit cards and they put even more in it. You know what brokers want you to do? Put even more money into losing trades. They want you to be you. They want you to be retail clients. I'm trying to get you to be more professional. Don't worry, I'm going to break all this down again and show you. People who I teach, this is what happens. I'm not going to show you good trades alone, ugly ones as well. Okay, this is euro dollar 1 hour bars. This is one of my apprentices, Seb. Okay, this is what happened to Seb. Couple of ugly trades, went sideways, went sideways, went sideways. Okay, 3 losing trades. 3 losing trades. Okay, any good trading strategy, I'm going to show you the strategy which I recommend we use, should make sure any losses are small in size, short in duration. So losses are small in size, short in duration. Okay, because by its nature, a trend following strategy, a momentum based strategy, should get you out quickly, because if the momentum's not there, it should get you out. That's why I love momentum-based strategy. I'm going to show you how and why we pick them for all of this, okay? I don't think I showed it earlier. Somebody just asked me about sterling dollar, euro, cable, basically. Sterling dollar, there we go. Short, which didn't make March, and then we had the long, which went up there, and then boom. Okay, the trend came in out. That's the 30-minute sterling dollar. Why do I like, which products do I like? What time frames? I'll come to that in a second. Okay, then we had the short trade again. Oh, let me end this poll. Will the Dow be higher by the end of the year? I think you're right. I think it will. 77% have said yes. By the way, you might want to make a note of that. I think they're right. Okay, And we're short at the moment on sterling against the US dollar. Okay, against the US dollar, just so you know. Just want to show that for the moment. Okay, that's a trade we've got going on at the moment. We'll come back to it. We'll come back to it. Somebody asked to see that. Okay, Juliet asked to see it. So there you go, Juliet. Okay. My point is this: the third trade went through the roof, went up to profit, doubled down, made even more. Okay, that's what real trading is like. You might have some small losses, but it's the big trade. So you might say, well, Alpesh, why don't you have a crystal ball which only gives you big winning trades? Well, I wish the market only ever gave big winning trades, and I wish I had a crystal ball. I'm normal. People will try and sell you on the fact. They'll say, oh, we can teach you how to be right 90% of the time. Bullshit. God is right 100% of the time, son of God 90% of the time, grandson of God 80%. And we're only trying to be right a bit better than a coin, but we're being sneakier than that. We're doing what my mentors taught me, and I'll show you who they are. When we're right, we want to add to those positions, so we make more when we're right than we lose when we lose. And we're going to risk profits, not our initial capital. Why? Because then if we're wrong, we only lose a small amount in any event. Okay, so much more to get through today. So let me just get on with the next one. Oh, by the way, in case you're wondering a bit about me, okay, our office is 84 Brook Street. Preferred Partners, there we go. We have a whole bunch of funds. They're not open to retail clients, so I'm not trying to sell you any of this. It's illegal for me to anyway to offer it to retail clients only. We have our funds domiciled out of Luxembourg. We're a British company. Those are our offices. I don't own the building in Mayfair. I wish I did. We rent one room in there, like most hedge funds do. Okay, we pay £15,000 a month in rent. Why? Well, guess what? If you're a hedge fund, you've got to be in Mayfair, and that's the cost of doing bloody business. It's extortionate. Bankers are Rothschilds, auditors are Ernst & Young, our lawyers are Allen and Overy. That's by the by. Some of the key questions people wanted answered. Actually, I'm going to come to those at the end, actually. Trade war and Brexit negotiations. Because like I said, I don't care what's going to happen with the markets. I care about finding the trends. And what I've got to do in this 30 minutes of the webinar, can I, right at the end of this, and I always ask people's permission, in the last 10 minutes of this webinar, and you don't have to stay to the end if you don't want, if I give you great content, continue showing you the business plan and how we enter, because those are the last two bits of the webinar, the business plan and how to get a good entry. Right at the end, can I show you some of the technology my hedge funds created, what we're going to float on the stock market? Hopefully next year we're going to float it. Can I show you that? Can I show you that? Just type yes if I can, okay? Because I want to ask your opinion. You don't have to stay to the end if you don't want, but it's the technology we create. We want to create the next Google, the next Amazon, the next Apple, okay? I think we've got $1 billion technology. I'm just going to show you that right at the end. Thank you. And also watch to the end. I'm going to make sure everybody gets all the information I've given on this webinar. So don't worry, you're all going to get that, but only those of you who stay to the end. I'm not going to give it to people who, you know, sort of log in and piss off. You know, it's not fair on me, okay? But watch to the end and you're going to get 2 ebooks as well and a whole bunch of infograms and slides and videos, so don't worry. Okay, now like I said, I'm a trader first and foremost, all right? This is what Channel 4 said about me, UK's best known trader. Like I said, written loads of books on trading, run a fund. Therefore, when I ask people, what would you rather trade in 2018, and 9% said Bitcoin, some said UK stocks, actually the answer I like the most is anything as long as I've got a strategy to make money. I've got to give you 2 things now, the business plan and the strategy to make money. Where I've got all this information from, Bill Lipschutz, my mentor, used to be global head of Forex at Salomon Brothers. His boss was Warren Buffett. People don't realize this. Warren was chairman of Salomon Brothers. And Bill was in my book, The Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders, published by the Financial Times. Okay, so just so you know, I've got proper credentials. Don't buy the book. It's 20 years old. I'm going to give you the best bits of information. But what I learned, okay, was from him and 10 others. Trading strategies from the world's leading traders. I wasn't going to do this for a living, i.e. trading, without meeting people like this and making sure I got it published and making sure it was good information, because otherwise that's my life I'm risking. I'm not going to risk it on a gamble, all right? I needed the best people in the world to teach me. Australian dollar, New Zealand dollar is pulling back a little bit. One of my favorites, in case people don't know, in terms of currency pairs, Australian dollar, New Zealand dollar, all right? It's been long, now it's pulled back a bit. Doesn't matter, we're still long on it, but I just want you to know that, all right? That's where we are on that little puppy. Oh, we're short on Apple now. Okay, we're short on Apple. That's right there, because I've got to post it from my assistant. Thank you. We're short on Apple, so we were long, went up. Oh, but you didn't get out at the top. Yeah, we didn't, so what? Okay, we're short now. We're going to start selling. There's some profit taking. We'll see what happens during the course of the webinar. All right, on that one, but just so you know. Okay, now we're not trading this actively minute by minute. Like I said, we want to be trading 1 trade a day. For you as private investors, we've got a team of people. You as private investors should look to do 1 trade a day. And I'll tell you what time frames, what products. And then with one trade a day, what you should be looking to do is probably you'll end up having 3 open positions at any one time, because as you open a new one, one of the other ones will have hit a profit or a loss in between. Okay, so it'll be roughly 3, and somebody had asked me that earlier. Okay, now one of the things that Bill taught me, and this is how I built up from going self-employed barrister with all those confusions, banging my head to eventually running my own fund. Okay, and I want to accelerate your process to being self-reliant. He broke it down into these points. He said, look, the markets can only do one of 4 things. So when we're devising a strategy, we've got to be able to handle this scenario. Either it goes up and up. And he explained to me that of these 4 things, private investors get it wrong on every single one. Because I said to him, I said, Bill, look, there's only 2 decisions to make, when to buy, when to sell. So how come 80% of private investors get it wrong? And he said, look, let me show you. And he broke it down and he showed me this. Let's say the market goes up and up. You know what the private investor does? Okay, they sell here after a small rise. You know what the professional does? They double up here and they ride the wave. So the professional has made a lot more than the private investor. Or the market goes up and then it comes down. You know what the professional does? They get out. The strategy didn't work. Hey, went out. They don't hang on. You know what the private investor does? They hold on, and oftentimes it makes them a loss. So the professional's got a better strategy there. Okay. Anybody who knows game theory understands what I'm saying. It's about optimal outcomes. Okay. Or the market, as soon as you buy, it goes down. Has that ever happened to you? Of course it does. Happens to all of us. We think God's out to get us. The market, as soon as we get in, goes down, goes against us. What do we do? Okay. You know what the professional does? As soon as it goes down, they get out. It didn't work. They don't wait for it to come back, because what if it doesn't? What if it keeps dropping? The private investor will hold on. It'll go back up and they go, I was right. Then next time it'll go down and they'll lose a lot more. So the professional's got an optimal strategy, which is learn to love your small losses. What if it goes down and down? The professional gets out immediately at a small loss. The private investor keeps holding and doubles down on a losing bet, loses far more. So again, the professional's more optimal. So Bill Lipscher said to me, look at that. That's 4 scenarios, Alpesh, where the professional's always making more than the private investor. And I said, bloody hell, even though you only got it, it's a game where you're only doing 2 things, when to buy, when to sell, you can still F it up. You can still get it wrong. So I'm putting all this together. Don't worry. All the trading we're going to look at, because I'm going to trade around news, is this. We're going to look to see when there's a trend, and only 1 of 2 things can happen when there's a trend. Either it continues and we exit when the trend reverses, so we profit by taking at that point. So how do we know when to enter and how do we know when to exit? I'll come to that, don't worry. Or it goes against us and we have our stop loss. We already said how we set up our stop loss, volatility-based stop losses. I've already explained how we put in more money, how much money we risk, but I'll come to all of that at the end in case you want me to go through any of it. Sterling, no, not Sterling. What have I got a question? I've got a question on Facebook. Yeah, Facebook is currently short. Why is it short? Well, because we've got the short signal. We were long, and it got the small profit on the long position. Now it's short. I'm assuming, I'm not looking at the markets because I'm doing a webinar, that actually the markets shot up and then they're now profit taking. Doesn't matter. I would rather trust the algorithm made by an expert than my own expertise, because if I had to choose my own expertise, I'd have told you at the start of the webinar, hey, look, the tech stocks are doing well today. Then midway through, an hour in, I've got to say to you, oh, no, there's profit taking. I don't have to say any of that. All I say to you is, well, my trend following algorithm told me this. Okay, and that's what I do when I'm on the BBC. Would you believe it? Whenever I'm on the beat and I'm talking to them, I just tell them what the algorithms are telling me. I mean, I might occasionally give them my economic views, but I don't trade on my economic views, because I'd have to outsmart the market every single day if I trade on my economic views. I trade on my trading rules of entry and exit. So we now need to do, in the final part of this webinar, in the last 25 minutes, we've got to do the business plan and how do we know when to enter. So we need to know when to enter, which is this point A. Okay, and look how we didn't ever get in there at the bottom. Okay, and point D shows us we'll sometimes have losses, but we'll keep those small because of the nature of the strategy. So how do we know when to enter? Volatility-based stop losses I've discussed, but I'll come back to. When to add to a position, which is point C. Okay, so we'll come to that. And then how do we filter so we know we only get in the high probability trades? We filter, like filtering dirty water. Put it through multiple filters. At the end, you're left with clear water. Okay, that's our job. And the type of trading we're going to use is the same type used by billion-dollar hedge funds. This is Winton Capital. We're in Hammersmith. I'm currently in Mayfair. Hammersmith is about a 20-minute drive to the west of me. Okay, Hammersmith is where Winton Capital is. They've got a $35 billion hedge fund. Okay, and this is a slide stolen from them. People go, oh, what's it like inside a fund? I said, well, never mind what we do. I'll show you what we do, but let me show you what they do. Okay, they look for when a trend starts. They have a lag before they buy. They look for when a trend peaks and they have a lag before they sell. So how do they know when a trend's peaking or lagging? Look at how simple that is. And you might say, well, it looks simple, but it's bloody difficult, Alpesh. Okay, why do they do it? Never mind why do they do it. They do offer $35 billion business. By the way, we're out of euro sterling. We are now officially out of euro sterling, as you can see here. Remember, we had the short position on euro sterling, which went down, 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 down. We're now long over there on euros against sterling as things stand at the moment. Okay, so that short trade, which began yesterday, is now finished, and we're in to the long trade. Okay, and a massive bloody lucrative one it was too. Thank you very much, and that's fine. Okay, so given that this is what they're looking to do, and $35 billion hedge funds keep it this simple, show me more evidence that lucrative funds do it. This is Man Financial. These are actual slides they did on how they find trends. And then I'm going to show you how we're going to do it as retail investors. It's the easiest way. I'm not saying it's the only way to trade. I'm saying it's the easiest and most suited to private investors. So Man Group, AHL, which is part of Man Group, okay, in case you know them, AHL, okay, these are their slides. They said they look to see what the market's doing, and they've got to then decide: do I go long, okay, or do I go short? All right, do I go long, or do I go short? All right, on that position. Long means I go buy because I think it's going to go up. Short means I sell on the hope of buying back cheaper later. In case you don't know what shorting is, okay. In both, you're buying low, selling high. It's just that with shorting, you're doing it in reverse order, which you can do. Right, and these are their actual slides of what they do. What they said is, obviously in over simple terms, I'll show you what we do. Same principle. The principles are all the same. It's principles that matter. Okay, and I'll show you the specifics so you can do it as well. Minus, minus, minus means the trends go down, and then there's a plus. So then they'll do that for every single type of different trade and scenario. And they might say if it's always falling, then they'll give it -4 and do a fully short position. They'll just go short. Equally, if it's fully long, because it's just rising, 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 it's fully long. But if it's doing a bit of both, they might go partly long. Remember I told you we add to winners? Well, when it goes from partly long to fully long, they're really adding to their winners. They were doing this. I didn't even realize they were doing this. I found out later by accident I was doing the same thing as them because I learned from someone else. All the biggest funds, all the richest people are all doing the same thing, but just on different instruments. Okay. The only thing that differs from all of these funds is just their marketing efforts. Okay. It's like saying, what's the difference between one bar of chocolate and another? I'm telling you, it is not performance. It is because Goldman Sachs and Merrill Lynch, they all hire the same people, move them around. Okay, it's all the same. It's just a marketing effort. It's commoditized. Okay, it's become commoditized, and I want you to be commoditized as well. So how are we going to do this? How are we going to find these trends and keep it this simple? All right, so you can do it. So you can do it with 15 minutes a day as well. I'm going to show you. All right, we're going to use what I call momentum-based trading. All right, momentum-based trading, you're going to be that guy. This is us, the small guy in the red suit and hat at the end. This is Goldman Sachs or whoever moves the market. We're just going to ride their coattails. They're going to move the market. We're going to get in after them. We're not going to try and get in before them. We're not going to be that greedy. Okay, we're just going to try and get in after them. And I said to Bill Lipschutz, my mentor, I said, well, Bill, how do I do that? And he said, look, the best way to do it is, because I said, I don't have it. I was a student, remember, at the time when I was writing my book, Mind of a Trader, and I was interviewing the world's leading traders. I said, look, I don't have enough money for all this expensive gizmos and software and all the rest of it. So don't tell me how to do this by getting lots of software and stuff. And he said, no, I'll show you how to do it. So what we're going to do is we're going to measure how close the price is to the high in any given period. That tells us momentum. And I said, well, am I going to need to get expensive software? He goes, no, all this is freely available. I said, how? He showed me. Okay, so he had to show me something which was befitting a private investor. Because the closer the price is to the high, the more likely there is buying pressure and it's going to move up. It's a bit like those auctions you see. I've got 50, anybody give me 60. I've got 60, anybody give me 70. I've got 70, anybody give me 80. I've got 80, give me 90. So that tells us there's not a certainty, but an increased likelihood of the price moving up. Okay, so what he said is if it closes near the high, and I said, well, Bill, what am I supposed to do? Sit with a magnifying glass and look for it? He goes, no. There's lots of indicators freely available on free software like this, which will allow you to monitor stuff like that. Is the price closing near the high? Because there's all these mathematical formula. And I said, well, if those all worked, everybody would be rich. And he goes, no, the thing is, none of them work all the time. They work some of the time, so people keep chasing them. I said, oh, great. So what am I going to do? Because what you're going to do is you're going to filter. You're going to filter and you're going to use some of these other techniques on where to put the stop loss, when to add to winners. But essentially what we're trying to do is we're trying to see when there's increasing momentum, okay, and decreasing momentum. When there's decreasing momentum, we exit. We don't wait for the price to drop if we can help it. When there's increasing momentum, we get in. And we do that by monitoring is the price closing near the high. So how do we do it? Well, let me just do the overview first. Okay, the overview is we're going to look for quality entries by following multiple, we're going to filter multiple methods of monitoring all of that. We're going to scan 12 to 20 products to trade. Okay, and I'll tell you which ones I like the most. Okay, in a second. My favorite time frames, and write this down, a 30-minute to 60-minute, and I'll show you why in the business plan section of the webinar next, why I like that. We can look at it on one PC, right, or laptop, and the reason I don't ideally want you looking at it on your phone is because you will like this, and also you'll overtrade. You'll trade out of boredom. These things are addictive. If you don't believe me, just look at the news. Okay, I want you to trade in front of the PC 15 minutes before and after work. You do 1 trade per day minimum. You can do more, obviously, if you want. 20 trades per month. And I'll show you mathematically in the business plan why 20 trades per month is the optimal level for your time and your money, okay? For your time and your money. So I want to now, I want to first give you the business plan. I put FX business plan. It's not actually just FX. It's anything, okay, that we're trading. Okay, I called it Road to Rich because actually I want to get your attention. I want to get your attention. All right. So the business plan is the next bit of the webinar. Give me 5 minutes for that. And then how to find the entries, 5 minutes for that. And then I'll show you how to do it all yourself. Okay. And we'll go through the Q&A. So when I was going through the business plan, Bill Lipschitz gave me this business plan because you've got to work out, is this even worth your while, worth you doing? I want you to be exciting and say, yes, this is worth my doing. Okay. So how do we make it worth our while? He said the first thing we've got to do is we've got to set our capital, our risk capital. All right. Trading is like driving a car. All right, it's like driving a car because when you first do it, it's too complicated. You've got the wing mirrors, you've got the steering wheel, you've got the indicator, you've got the rear view mirror, you've got all of that, and it's just like, oh my God, this is too complicated. But in the end, we all managed it. Trading's the same. And Bill said to me, trading is just like driving a car. It looks overwhelming, but it's not. But the first thing you need to do before you know how to know when to enter, okay, which I'll tell you, the first thing you've got to do is the business plan. Is this worth your while? So I said, okay, Bill, show me the business plan. Remember, this is Bill Lipschitz, my mentor, Global Head of Foreign Exchange at Sanders, in my first book, okay? And he said, so we wrote that business plan. I was at university at the time, all right? Road to Rich, we called it. He said, the first thing we want to do is a business plan is about where we intend to get to. Where you intend to get to is when you're proficient at trading, you will set your maximum loss on any one trade as 1% of your total capital. When you're proficient, not on day one, when you're eventually good enough, because the business plan is about the future. So whatever your total capital is, on any one trade, you will risk losing if your stop loss is at 1% of your capital. That's how you decide how much to trade. And I said, okay. And by the way, don't worry, I'll show you how you can work all this out later if you want. So let's say you have total capital eventually, not today, but eventually of £20,000 or $20,000, because it's a business plan where you intend to get to. Today is about working out whether it's worth your while doing any of this, because will you actually get there? Okay, right. So the maximum loss per trade would be £200 if your stop loss was hit. Okay, 1% of total capital. Thank you, Marguerite. It's my mum, by the way, who's in that picture a moment ago. Total capital, £20,000. Maximum loss per trade, £200. Because 1% of 20,000. He said, okay, imagine you have a strategy. Don't worry about this, but imagine you have a strategy where you win, or you're right 70% of the time, and you lose 30% of the time. And I said, okay, but you're gonna have to show me the strategy. And that's quite high, 70-30. He said, don't worry, it's just there for illustration. Okay, so your average loss will be £200, 1% of 20,000. Your average win, because we're going to pick a strategy where we add to winners and a strategy which gives us trends. So we'll pick a strategy where we make more when we win than we lose when we lose. So we'll win £300. Just assume these figures for now, okay? Don't worry, they're over optimistic. Just assume them. So he said, imagine you do 100 trades. I said, fine. In our business plan, I do 100 trades. I went, wow, Bill, I'm doing the calculations. That means 70. I'll be times £300, profits of £21,000. 70 times £300 means profits of £21,000. That's amazing. He said, yep. Okay, but 30, I'll be losing. £200, that's losses of £6,000. I said, Bill, but that's still net profits of every 100 trades of £15,000. I told him I want to leave university right now, Bill. Go tell my parents, all I'm going to do is sit in front of a computer screen all day long, tapping away at my keyboard, and magically money will come in my account. Every 100 trades, I'll make £15,000. Won't that be great, Bill? I said to him, that's amazing. That's what I want to do. I said to him, that's all I want to do. And he said, calm down. Obviously, that's not, there's a problem with that. I said, what's the problem? He goes, you haven't got a strategy yet. Don't worry, that's the next part of the webinar. And he said, you're being over optimistic. I said, no, Bill, I got carried away at this point. I said, look, all I got to do is find a strategy which allows me to do 100 trades per day or week. Remember, this is 20 years ago, so everybody wanted to be a day trader. And I said, I can be a day trader. I was in the news and the independent newspaper for being a day trader. Okay, great. I said, listen, even worse, I tell you what, I'll keep my day job. I'll tell my parents I'll keep my day job and I'll just do 100 trades in a month. I'll be a day jobber. Doesn't matter. I'll do it on the side. Okay. I'll start off slow. I said, look at the maths. If I'm a day trader, 100 trades per week. Let's say I just did 100 in a week. Stupid, I know. Okay, 50 weeks in a year, because the other 2 weeks I'll be gallivanting in my Lamborghini. I don't have a Lamborghini, by the way. Okay, whoa, won't that be great? Won't that be great? Okay, that's 5,000 trades per annum. Well, 5,000 trades per annum at £15,000 per 100 trades is £750,000 a year or $1 million. I know what you're all thinking. Alpesh, don't be stupid. We're not going to make 90% of that. We're not going to do 75% of that, 2/3 of that, half of that, even a third or a quarter or a fifth of that. Let's say we didn't even do 15% of that. Let's say we did 10% of that because I was overly optimistic. All business plans should be decimated. Take 10% of it. Let's say we did £75,000 instead because we were over optimistic on everything, on how often we're right, on how much we win when we win, on how frequently we'll trade. Let's say we did £75,000. Well, hang on, £75,000 is still way more than the 500 to 1,000 per month, which I said is our goal. 1K per month, I said is our goal. So even 10% of this business plan was over optimistic. So I said to Bill, okay, we've got to tone it down a bit more. We're being over optimistic. He said, imagine you just keep your day job, Alpesh. So he didn't have to have a conversation with my parents that I was going to leave university and give up everything to be a trader. It's so embarrassing telling people you're a trader because they're thinking, what does that mean? You sell secondhand cars? What does trader mean? So let's say instead you did 100 trades per 6 months or 200 trades per annum. You know what 200 trades per annum is? 1 per day. Remember earlier I said 1 per day? That's manageable. Or 5 per week. You might just do everything in 1 hour on a Friday. You might just sit in front of the computer for an hour before and after work on a Friday and go through these trades and say to yourself, okay, yep, we're short silver, great, making money on that one, whatever it is. Amazon, shorted at the moment, okay. Exited the long, we're now short, taking profits on it. There you can see the green up arrow and the green cross to exit, and we've got the down arrow to go short on Amazon, take some profits on it. Actually more than profits, take an actual out and out. Okay, Philip, the answer is yes. On indices, forex, and stocks. And the reason we're applying the same principle of trend following is really simple, because psychology is the same. Is the price closing near the high? Okay, so I'll come to entries in a second. All right, so the day jobber does that. Well, that's still £30,000 per annum, which is less than half of the 75,000, which was 10% of our business plan. Now we've taken about 4% of our business plan, but £30,000 per annum is still almost 3 times more than the 1,000 per month, which I said is our goal. So even if we took our business plan, took 10% of it, then halved it, and took 4% of it, we're still almost 3 times more over optimistic. That to me is a business plan worth pursuing. It's worth starting today with a small sum of money, not 20,000, however small, on the basis that if you become consistently profitable, you can always increase it to 20,000 and get closer to these figures. Do you see what I'm saying? But the question you should all be asking is, Alpesh, if this is correct, and you can do it with 1 trade a day, 200 trades per annum, how come everybody isn't rich? That's what you should be asking me. It's what I asked Bill. I said, okay, well, if this is all true, how come everybody isn't rich? 3 reasons for failure, he told me. Bad teachers, bad mentors, same thing. Okay, bad strategies. Well, let's close the webinar with the strategies and then we'll do the Q&A. The strategy section of the webinar is this. Remember, and that's my mum, by the way, always makes an honorable visit in my webinars, okay? I think I've got the greatest strategy thanks to people like Bill in the world, because I could do it. It took me from being a retail investor to a hedge fund manager, so I must have something which I thought was great from them, and we publish it in the FT, so it must be, yeah, it's been validated. But the point is this, I'm going to share it with you, okay? Our goal was 100 trades for 6 months, not over trading, because people mess up, they blow up. Not trying to give you right all the time, because that's when people mess up. See how we navigated all the potholes, all the problems other people face. It's not 30,000 per annum we're trying to get. Remember, it's 1K or £500 to 1K per month. And I'm going to come to that business process again in a second. But first, we need to, having looked at the business plan it's worth doing, look at the most important part of the webinar is the entry. Okay, so I need you for 10 more minutes. Remember what he said. We're going to measure how close to the high is the price closing in each period, because that, like an auction, tells us there's buying pressure. But how do we measure that? How do we measure that on free software with real-time prices, which is easy enough to do? And then how do we know which broker to place it with? And what's it telling us? Well, it tells if the price is near the high in each period, it's more likely to move up. Not a certainty, but 60-40 in our favor. And this whole principle of trend following, well, in 2016, trend following hedge fund strategies were the best performing. Okay, so this works. So I said to Bill, how do I do this? And he said, the way you're going to have to do it is you're going to have to do it for free because you're a poor student. Remember, I was a poor student at the time. So we're going to look at the indicators which are already out there. Okay, we're going to look at multiple indicators. Okay, thank you, Marguerite. That we're going to look at the multiple indicators which are out there. For instance, there's many indicators, but none of them work. So we're going to use them all the time. They don't work all the time, they work some of the time. So we're going to use them in a way the textbooks don't. And we're going to use multiple indicators because no one indicator works all the time. So only when all of them are telling us something, and we're going to use them in a way the textbooks don't. And then we're going to have a third rule. So the first rule was multiple indicators, such as the MACD, all of which measure is the price closing near the high. Number two rule was we're going to look at them across different time frames. So not just say the 30-minute time frame or whatever time frame it is we're looking to trade. Let's say it was Bitcoin. Okay, Bitcoin was shorted. This is a short on the 30-minute bar. We'll look at the next time frame along, and is that also showing us that there's downward pressure, downward momentum based on multiple indicators? And all these indicators we have listed here anyway. Okay, but you can do it manually. You could look at multiple indicators across multiple time frames. And the third thing we do, okay, is PC, and I'll tell you what that is in a second. So we're looking at these multiple indicators, but not in a way the textbooks do. So what he said we do is we look at things like the MACD, but multiple indicators. Are they all, write this down, flat to rising for a long trade? Have they just flattened to rising? We don't look at them the way textbooks do. We're using them differently because some of them were too early, some of them were too late. And we found the best way to remove them being too early or too late was to look at it our own way. So we just look, are they flat to rising, multiple indicators, flat to rising across multiple time frames? So not just the short-term money is pushing the market higher, but long-term. Have you ever placed a trade where you thought the trend's in place, but suddenly it drops against you? That's because you didn't look at multiple time frames. That's not enough. My secret sauce is different. The way the textbooks don't. Multiple indicators, flat to rising, the way the textbooks don't. But there was something else. It wasn't just that. What we also had to look at wasn't just that. What we also had to look at, you can see it there in more detail, was something called PC. What's PC? We looked for price confirmation. What does that mean? That means we didn't just look to see that green arrow, we got our computers to tell us when multiple indicators across multiple time frames are flat to rising. Did the price make a 2-period high? That's called price confirmation. Write it down, PC, number 3. It's probably the most important thing, or one of the most important things. Price confirmation, because it then tells me the rest of the market is putting money behind this. They might be putting money into it because they've seen a piece of news, because they had, I don't know, they look at Fibonacci's or Elliott waves or whatever. It doesn't matter. As long as money has gone in and it makes a 2-period high, price confirmation, and I already had on my indicators that the price across multiple time frames was closing near its high, measured by multiple indicators, because no one indicator is right all the time, but they measure is the price closing near the high in different mathematical formula. So we filter, then the odds of a big increase, well, first of all, the odds of a move have increased because of multiple indicators, the odds of a big move have increased because multiple time frames, and the odds of getting it right have increased because we're not using it the way textbooks do, and we wait for price confirmation. That's what we do. I use this strategy. I'll show you how. If you don't want to do it manually, you can just download it onto the software if you wish. Okay, I developed this when I was at Oxford, as I said, and that's when I met Bill and he showed me the business plan. Sorry, I look at Dick. Red carnation means last exam. I perfected my own strategy, won awards, for instance, in the FT. That's me on the business page, the front page of the business section of the Financial Times. Patel is top 100 forecaster. Okay, they asked me, will you write a weekly column called The Diary of an Internet Trader because you're bloody good at this? And I was. Okay, when you get profile, you take it. The FT then said, well, will you write about it? And I said, yeah, I want more profile, because remember, I was just a private investor. I thought, I want to run a hedge fund. I want billions. If I've got this kind of profile, I'm winning stuff. I know what I'm doing and I'm good at it. So I set up the asset management company. Remember, all my columns in the FT always focused on this mathematics part of it. You know, do the sums, break down the business plan, break it into bits, multiple indicators, multiple time frames. I'll show you how to download it in a second. Don't worry. We then used it to set up the hedge fund. That's me at my first offices, Linen Hall on Regent Street, because we couldn't afford St. James's, we couldn't afford Mayfair. In between those two is Regent Street, so we put it there. So we were close enough to both. Who paid for all of this? It cost about $1 million to set up a hedge fund. Merrill Lynch HSBC licensed this software amongst many other people, and that's where the $1 million came to pay for it. And that's me in front of my screens in my first office, and it feels like yesterday. Still have hair. Okay. It was the fact that I was able to put, through my expertise, all of this and what I actually just copied and learned of people like Bill Lipschutz into one indicator. So what I'm telling you is you can do it manually, multiple indicators, things like the MACD, multiple time frames. MACD2 means the MACD in the next time frame. Stochastic, multiple time frames, price confirmation, flat to rising. So we used to do this manually. We used to look at all of this manually, and then we just got it programmed in so it could sit on something. That's what led me to then being on all these TV programs. Okay, that's me on Sky, BBC. Because if you're accurate, people want you. You use your profile. You keep calling the market right. They say, yeah, we want you to host on CNBC. I had my own show on Bloomberg for 5 years. Then I set up the hedge fund, so I couldn't, due to conflict of interest, do both a show on Bloomberg because I could move the markets and be a hedge fund manager. Okay, but the profile is what allowed pension funds to give us money. Okay, if ever you get into the fund management business, I assure you, everybody knows how to make money. The problem is, how do you raise capital? Raising capital is the scarce resource, not strategies. So the problem at the moment is most people, this is what it's like without an indicator, okay, without an algorithm telling them multiple indicators, multiple time frames, when to buy, when to sell, like this. So what happens is when they do it like that, okay, you know what happens? Somebody had said euro sterling, I think, didn't you? Somebody had said euro sterling. Well, on the fifth, oops, where has it gone? 15-minute bars. So the shorter time frame, okay, we're long on euro sterling on the 15-minute bars, okay. So there was a short, now it's a long. Without an indicator, you're trying to just do it all manually. You can do it like these people are trading, you know, in corn, one at a time. It's bloody hard work. This is the problem retail people have. So we thought to ourselves, wait a minute, I think we've got a way of solving people's retail problems. They're trying to do one thing at a time. They're focusing on one thing, the Dow or whatever. Okay, Richard, I'll talk to you about the new ESMA margin rules, which I think are phenomenal. But I'll talk about the margin rules in a second. Okay, don't worry, I won't leave it. With an indicator, automated. Look, your emails. Automated. You don't write handwritten letters anymore. Everything in life is automated. With an indicator, you're able to look at more things. There's more corn you're able to take in, pick out more quality, and do more. We gave people this indicator. What we found is their confidence with an indicator jumped. So before the indicator in blue, after the indicator in orange. Okay. And what we said to them is, we want to know, okay, what you think are your problems, and can we solve them? Their confidence in a strategy increased because they knew when to buy and sell, because the indicator told them where to put a stop loss based on volatility, like I said, or you can do it manually. Told them multiple indicators, multiple time frames, right? When markets were trending, it monitored all these markets, every time frame of every single one of them, okay, constantly. So you could look at all of these currencies, Ferrari, Disney, whatever else, okay, European stocks, US stocks, Bitcoin, Spotify. Somebody asked me about Spotify earlier. I'll look into it in a little bit, okay, in the Q&A, so don't worry, I'll come back to that, and definitely Richard on ESMA, okay. What we found is it reduced their stress over losses, because they knew they were only going to have small losses by the nature of the strategy being momentum, but also stop losses were always in place, okay. If they knew if they left the computer, you put a trailing stop loss to take you out at a profit, because it's trailing behind your entry. If you're going to be at the screen, well, it already gives you it tells you when the momentum's run out anyway. So either way, it was suiting. Business plan for long-term profits, because I gave them the business plan. Clarity of exits, because it tells you when to exit, either through a trailing stop loss because you're at your work, or it tells you on the screen, X, momentum's run out. Clarity of entries, because it tells you when multiple indicators, multiple time frames. Clarity of stop losses. Okay, so on every metric they didn't even know they could measure, and that's the approach you should all be taking, the trend following approach, multiple indicators, multiple time frames. Now, I said to you, if I promise to give you great content, can I tell you the technology that we've developed at the end? So now I've taught you everything, what you should be doing. Trend following, not news gathering, multiple indicators, how to put a stop loss, how to put an entry, multiple indicators, multiple time frames, add to your winners, never to your losers, when to add to a winner. If you want to automate this, you want to use some of the technology we created, and we think we've got the best technology in the world. Well, let me tell you now how to do it, okay, using our technology. My hero is Steve Jobs. That's Steve Jobs. If you believe in a technology, Alpesh, you stand up and you say, this is my technology. You don't get somebody else to say, it's your technology. We created this. I said, well, wait a minute. I got a fund, okay, but technology companies, Amazon, Apple, they're the biggest in the world. We should spin out our technologies and become an IPO, float it on the New York Stock Exchange, because if our technology is any good, put your money where your mouth is. And that's what we did. We took all I've told you, and we called it Project pipspredator, which has all these rules. I'll show you how to download it in a second. Don't worry. Buy when the price goes above the horizontal line, because I told my team, put this all into an algorithm which private investors can use. The same way my fund people use it, because that comes in the price momentum and odds of a probable move have increased. and the arrow alerts you where to look for a signal and when you should buy. Now you might say, oh, Alpesh, doesn't that mean that your fund isn't going to work anymore? No, because guess what? The Forex market alone is $3 trillion a day. Unless you've got $1 trillion and you can hack the algorithm behind my indicator, guess what? It's not gonna you're not gonna close my business down. But what you're gonna do instead by using it is, like just when you use Facebook and Apple and everything else, is help me develop $1 billion business. That's my ambition. That's my technology. That's what my hedge fund invested in. That's what I own. What we found, and this is probably one of the most important slides, is people ask me, okay, so how much does the indicator make? I mean, that's the big question, isn't it? When you're using it here, we've been using it throughout all of this. Australian dollar, Swiss franc, okay? We're short that. The indicator told me to go short, okay, here, right? And it's falling. I'll zoom out again, right? How much does it make in total across all of these across a given period of time? And you don't necessarily have to trade the same things I'm trading, okay? I'm telling you what I love, all right? Okay. We found the 1 hour time frame to be the most lucrative. 30-minute and 1 hour is the best, even if you've got a day job, because if you spend 15 minutes a day before and after work looking at 20 instruments, we found statistically on the 1 hour and 30-minute time frame like this, you will in a 15-minute period find one trade which just kicks off trending on a 15-minute period before and after work. Mathematically, that will happen. And the 1 hour and 30-minute time frame gave us the most money. Why? Because it meant in a month we were getting about 25 trades in a month, roughly one a day. Okay. Some months, like when Trump was elected, you might get as many as 40. Some months, and August tends to be a bit quieter, like this month, you might get as few as, say, 16 or 17 trades in a month. That doesn't matter. The net pips captured, this is the most important thing. If you learn nothing else from this, and I'll show you how to download all of it, don't worry. If you learn nothing else, please remember this bit, and I need you just for 5 more minutes. 2,250 pips, that's the winning trades minus the losing trades, okay? The total pips capture was 2,250 across 25 trades, all right? Our best winning streak was 70 winning trades out of 100, and the worst winning streak was 30 winning trades out of 100. Best and worst, because guess what? Even when you throw a coin 50-50, you can get heads, winning streak, you can get tails, losing streak, all right? So it's not about trying to be right all the time, you have winning and losing streaks. Our typical maximum loss before the stop loss was hit was 50 points or 50 pips in the language of trading. Now imagine, and I don't recommend you do this, imagine you did a whopping £2 or $2 a point. Now, this is not about spread betting or CFDs or Forex trading or whatever else. It can all get translated into pounds per point or dollars per point, right? But imagine you did a massive, and it's too large, £2 or $2 a point. Well, your loss would be £100 or $100 on a losing trade. That's too big. But bear with me a second. 2 times 2,250, 2 times 2,250 in a month, that's how many net pips we captured across 25 trades, remember, is £4,500 in a month. Well, hang on, okay, £4,500 is 10 times more than the 500 a month I said was our goal. So we were on this making 10 times more than we recommended for the private investor. In other words, and this is why it's important, they shouldn't be doing £2 a point. They should be doing 20 pence. And there are brokers which allow you to do it. I'll discuss that in the brokerage section. 20 pence. When we knew you could trade and hit your £500 or 500 pence a point, £500 or $500 a month goal on just 20 pence a point trades, we knew we had a mass retail product. It's like working out that Apple or Facebook is mass market. That's when we knew we had $1 billion piece of software. Because retail investors don't have lots of money, if they can do it with small sums of money, build towards their business plan, and then increase their leverage and trading and not worry about the ESMA goals, then, okay, then that's great. That allows you then to hit your targets with a small initial capital sum, because we don't want you over trading. We only want you to do one trade a day. Don't want you spending too much time. We needed it to be a small sum money. So we had to fit all this in. It had to be everything. When you're designing a new product, even a phone, it has to be small enough. The battery has to last long enough. It has to be easy on the eye. It has to be able to do enough functions, store music, blah, blah, blah. It's the same thing with an indicator. It has to be able to do all of these things. Otherwise, you as a private investor will say, get lost, Alpesh. But people wanted more. I said, what more do you want? And they said to me, well, we want somebody who's a hedge fund manager. And we want somebody who, if they think they're so good, we don't want them to charge us anything every day, every week, every month, because it should be profitable, and they don't need to charge us every day, every week, every month. And I said, well, that's an interesting point you raised. Tell me, do you want the moon on a stick? They said, we want an FCA-regulated hedge fund manager, which I am, professionally trained communicator. So whenever they're discussing this with us, they don't bore us, whether it's in webinars like this or little video snippets, just to explain the concepts and everything else. Because, you know, don't just give us the indicator and leave us alone. Communicate with us. Give us videos, articles. We want professionally trained. I'm trained by Bloomberg as a TV presenter, and I'm a barrister, so I'm professionally trained. Want somebody who's got credentials, paid by Bloomberg, paid by Financial Times, paid by both of them. So, you know, somebody who's credible, who's done academic research and development. I lecture at Oxford University, and continues researching, has a whole bunch of boffins doing this because the markets keep changing, making sure they keep updating. Okay, our indicator's on version 4. We're in the middle of version 5 because we might tweak little things here and there. Okay, and has won awards like I did in the FT. Not awards as best educator. What bollocks? That's rubbish. You know how people win awards for best educator? They pay the advertising company. All right, no, won awards in the FT. Okay, because everybody else out there is wrong. No, that's why I started doing these free webinars to teach people, to blow out this education industry and brokers who are trying to rip people off. And on the side, if people buy my technology and the hedge fund software, guess what? We've got a $1 billion company we're going to create. We're not going to be billion on day one. Facebook wasn't. Might take us 10 years to get there, but we'll get there. Similarly with the hedge fund, we'll get $1 billion of assets under management. Might take us 10 years to get there. The questions people have, I'll show you how to download it. Don't worry, Francis, Jonathan, Alexis, Jeff, Dick, don't worry. Nathan, I'll show you how to download it. Give me 1 second. In 3 seconds, I'll give you the link to download it. Okay, can it make money? Well, yes, and I'll show you some more trades. Is it easy? I'll show you and mentor you personally, because the more of you who get profitable, the more we can go to the venture capitalists and say, hey, guess what? This works. Invest in it at a high valuation. Can I do it anytime with a day job? Yes, because we create it for people with day jobs. You know what my day job is? It's not sitting in front of a computer screen. I've got staff I can do to sit in front of a computer screen. My day job, and 90% of my time, is not sitting in front of a computer. Anybody can do that. And working out when to buy and sell. That's it. Anybody can do that. Because we've got algorithms to do it. My day job is meeting sovereign wealth funds, pension funds, okay, to bring capital into the company, because that's what fund managers do. We manage our own capital. 10% it's my own money, 90% is other people's capital. Got to have your own skin in the game before other people give it. Why do you manage other people's money? Because you earn more fees. That's what fund management is about. It's about profitability, from making profits for people. How much does it make? Let me show you. Does it make life easier? Hell yes. It allows you to free up all your time. Are there checklists? I'll give you the same manual I give new trainees in my firm, okay, as well. And you're about to see how good they are. Right now, my apprentices then send me what they're doing. I don't charge them anything every day, every week, every month, nothing like that. So don't worry. Euro dollar 5-minute bars, because I'm confident this works. I'm confident because I've seen it. 91% of my apprentices become profitable. Some of them takes them a week, if they're not already. Some it takes, I admit, up to 9 months, because you know they've got other things, other jobs. They come back and they say, "Oh, I'll be sorry, it took me longer." This is euro dollar. Okay, it's one of my apprentices, 3-hour trade. So went short, went down here. That told them when to exit if they're sitting in front of the screen. If they're not, the trading stop loss will get them out. Excuse me, 75 pips, including additional positions, 75 times. Why such a large trade size? Well, when you know you're consistently profitable, you increase your trade position size. $2,250 over 3 hours. That's not normal. That's when you know you're consistently profitable. That's when you do it, okay? As well. Euro dollar 15-minute bars. Thomas, I'll answer your question about MT5. 9 hours, okay, took 9 hours, 73 pips, including additional positions. Remember, we're adding to winners. That's the secret sauce. Okay, and you know when to add to winners because it tells you when you're placing the trade, it tells you where to add to the winners. If the trend continues to that, it's not forecasting it will, then the trade would kick in. Okay, and I'll tell you which brokers I like as well. 73 times $30 per pip, $2,190 in profit. Okay, I won't go through all of them. Similar idea. Okay, so who's endorsed this? Well, I got to tell you, the chairman of the Chicago Board of Trade, the world's largest exchange, Pat Arbor, as he was then chairman of the Chicago Board of Trade, wrote this on the back cover of my Financial Times book. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. You won't find this in this format in the book. I've drawn it out for this webinar. Okay, so don't think, oh, I'll just buy the book. Okay, don't buy the book. It's 20 years old. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. Clearly elucidating the methodologies of successful trading strategies. That's the chairman of the Chicago Board of Trade. It's not just some actor, as all these people have, you know, just get some actor to give some fake reviews. No, chairman of the Chicago Board of Trade. on the back cover of Financial Times book, as well as a whole bunch of other traders who said, yeah, this is it. This is what it takes. Because my job is to get you from this to this, this to this. That's my job, is to get you, as I had to do. It took me 20 years, well, 10 years to get to that. I want to get you to that between 6 months to from 1 week to 6 months. That's what I want. Okay, to that. Without an indicator, this is what people are doing. They keep looking for one trade at a time. Because what they'll have to do, they'll have to do it manually. Manually, they'd have to look, as I've shown you the manual rules, and that's fine. Multiple indicators, MACD, stochastic, all the rest of it, flat to rising, across multiple time frames, price confirmation, 2-period high. They'd have to manually go through everything and say to themselves, yeah, it's doing it, it's not doing it, or whatever. Okay, oh yeah, there's a trend. But we get the computer system to do it. And the indicator sits on this software. The software, MT4 live real-time data, is all free. The indicator sits on there and it tells you the trades, okay? Tells you, right, to go long, go short, go long, okay? And that's the job of it. And we thought, well, why would we not try and convert this technology, given all other technology companies, $1 billion companies, into that? It removes you from going like this, turns you into this. My favorite student, and he's in London at the moment, he's moved from Barclays to Dubai, lives in Dubai now. He doesn't trade full time, but trades a lot more than he has ever done because he's got other businesses. I love the pipspredator. I really simplified my trading as a beginner. He was one of my first apprentices about 4 years ago. Okay, I'm building a technology company. I want apprentices. I take them in groups, batches of 25 at a time. Okay, I want them to join me. Why 25 at a time? Because I'm doing the mentoring. I will mentor you for life. Okay, you're not going to pay for anything every day, every week, every month. All right, but I take you in groups of 25 because I do the mentoring. And I give you another guarantee. You've got a 30-day, no quibble, money-back guarantee to use the indicator. The MT4 software is free for life, real-time data. The indicator, 30-day money-back guarantee. You might make the money back in 30 days. You might monitor it for 30 days, whatever. For using it, because we want to float this company next year, I'm going to give you, just for using it and trialing it in that period, to keep regardless of your decision, I'm going to give you signed copies of 2 of my most recent books, plus a USB of all the information, the best bits of my information and all the rest of it, okay? The only downside is I limit this always to 25 licenses per event, all right? When, and I've had 600 apprentices over the last few years. When I get to 1,000, we're going to IPO the company because then we'll have enough of a cohort to show that we turn 91% profitable between 1 week to a 6-month to 9-month period, okay? I limit it to 25 at each event because I'm doing the mentoring. And then when I get less than 3 emails in a day, or if I feel like I want to take on more apprentices, I take more on, okay? This is how it works, and that's what I'm doing it. Thank you, Mike, my friend. Thank you. Now, I asked you, what are your #1 trading problems that you want solved? Guess what? 25% said knowing when to enter. That's why we use the indicator, multiple time frames. Knowing when to take profits. Guess what? Trailing stop loss, or the indicator tells you with a cross, the moments has run out, handling emotions. When you're using an algorithm, you don't have emotions because the emotions go into the algorithm. Having a trading business plan, I've given you one. I'll give you the manual, physical format. So you've got that. Having a trading business plan, like I said, we'll give you that. Not to be a screen slave. This removes that screen slavery. Okay. Using stop losses tells you where to put the stop loss based on volatility. So we remove every single one of those problems people said that they had. Every single one of those problems. And that's what was critical for me. But I had to remove all those problems. That's first come, first serve. But there's only two things I ask for you. One, that you're enthusiastic. And 2, that you speak to the venture capitalist investors. We're talking to Sequoia Capital, Amazon Ventures, and Google Ventures because they understand big data about investing in this. We want to try and do it when we get to 1,000 apprentices. We've gone through the program, got 600 who've gone through it so far, so that we can then go global and get a good valuation of a 30 million valuation, and then over 10 years get to a billion valuation. That's the aim. Okay, the mentoring is through me personally, through emails. In the future, there'll be other people mentoring, but you guys in the initial charter member group, the initial group, you'll always have me for life. Why can I give mentoring for life without charging you something every day, every week, every month? Well, because I'm confident you're going to be profitable. So nobody else will do that. There is not a single other person out there in the software field or in the trading education field who can give you mentoring for life because they know they can't do it. They can't work. They'll have to keep charging you. Videos you've got from me, you've got 2 dedicated websites, so actually 3, I'll show you those, with a 30-day bite-sized course and a 12-week course as well. You don't have to do the course or the mentoring if you don't want. You can just download the indicator and start trading tonight and start making money tonight as well. You might just tonight download the indicator and start going short on silver, for argument's sake, or whatever else, but it removes and shows the one way you should be trading. I give you the same manual that my team has. You get to keep the books regardless. Two signed copies of two of my most recent trading books. That's worth £50 anyway. USB plus a whole bunch of other goodies. And the mentoring is bespoke. You will fill in a questionnaire. I will get to see whether you have problems with stop losses, what you have problems with. And my job is to make sure that I remove each of those problems. Okay. Yes, indeed, Philip, you can use it for stocks and Forex. Timothy, you are in. Peter, you are in, my friend. I'm glad you're excited. Let me know when you're in, and also tell me that you're excited. Manjit, I'm delighted you're using it. I think you're in South Africa, aren't you? Gold, I'll look at in a second. Gordon, don't worry, I will come to that. This is the link, okay? This is the link. If you've not already seen it, this is the link, alpeshpatel.com/here. First come, first serve. I also want to do, subject to what the lawyers say, and it should be okay, everybody who's an apprentice will get free shares in the company. That's what I want. Okay, I've got to speak to, the lawyers just need to get the wording right and all the rest of it and the disclaimers on that. But free shares in the company when it IPOs, that's the ambition, okay? And I want to IPO it next year. That's the goal. At the moment, it is a one-off payment. There's no weekly payments, no monthly. We give free upgrades. There's no upsells. There's no data charges. There's no charges for upgrades, nothing like that. Don't worry. And it's at 997. What the venture capitalists want to do, what the investors want to do to get it into the stratospheric levels is they want me to charge in future. This won't affect you guys. In future, £2,000 a month. Sorry, £2,000 a year for the mentoring, £2,000 a year for the indicator, the software indicator. At the moment, it's all indicator and mentoring are all one. Okay. And it's 997 one-off, and you've got me mentoring you. Okay, Arthur, delighted you're using it. Don't worry, email me, Arthur, and we'll get you to that profitability as well. Delighted, Marguerite. I am delighted. Bonsoir, Marguerite. I think you're in Paris. I think I remember you telling me you're in France, because I know we've spoken before as well. Gordon, let me know who. I'd like to know who, because what you're looking at is what you're seeing live on screen. Okay. So let's have a look at a typical position, Gordon. Amazon, 30-minute bars. Like I said, I like 30-minute bars. You've got a losing trade. Look, losing, did it? And then you've got a winning trade, which more than makes up for it. Okay, there. And then you've got a short position on there. So Gordon, let me know. Oh, there's two Gordons there. I'm not sure which Gordon this is. Gordon at Cyberzone. All right, let me know. Options versus Forex. I used to do options trading, but then but that was more for the leverage. I don't need it for the leverage, so I prefer just doing out and out the Forex side of things anyway. Also because the options market sometimes can be quite illiquid, and when it's illiquid, Barbara, you are in. Kev, you are in as well. I can see that, and I'm excited for you, my friend, as well. So as you sign up, let me know, people, so I can give you a shout out. Let me just show you what else there is with it, with the software. Like I said, we think it's $1 billion business, okay? Because it's technology, and all the technologies are out there. You've got, actually, before I tell you all of this that you're getting and the 30-day money-back guarantee, this is my best apprentice, Naomi Waistall. She left university, came to work for me. For 4 years, she worked for me as my assistant, and then she joined Newton Investment Management, where she now manages £10 billion. Yeah. A lot of people in my firm, and I can see some of my staff looking, yeah, oh, something like, what? Yeah, I know, they've all got their CVs out. They start at my firm because it's small, and then they want to join Newton or Goldman Sachs, whatever, and that's fine. We take them in, train them up, they go elsewhere. It's a bit like the Leeds United of this. Clark, in dollars, let me just convert 997. You only pay VAT if you're in the EU, okay? Let me just convert it into dollars for you. It is roughly $1,200. Okay, Clark? It is $1,200 US. Thank you, Bernie, my friend. I appreciate it. That was the most successful, Naomi Waistall. All right. What we give, what I want you to do, I want you to instantly download it. You're going to get full customer support. We've even got a 24-hour helpline number. If they can't help you, they arrange for the person to call you up to help you. Step-by-step instructions, trading manual, videos on running profits. I'm going to show you the course as well, because I wanted people to be over the moon. It's not enough people nowadays have a piece of software. They need to have the knowledge. They need to have the knowledge beyond just a piece of software that, oh, I've got access to the man behind it. I want them to be over the moon. How can I create $1 billion business unless you're all going to be over the bloody moon over it? Okay, that they've got the person behind it, they've got access to him mentoring. There's no weekly fees, there's no monthly fees. Why do I limit the number of apprentices? Well, because I've got to do the apprentice. I want to make you get to profitability. The more of you get to profitability, more successful I am. Stephen, what brokers do I recommend? Brilliant, Nalin, that you are already in. Stephen, the brokers I recommend, I'm going to email you them. I happen to be a brand ambassador for 24 Option. I've also been a brand ambassador in the past for Intertrader. I do like and use ETX as well, but I'll email all of you on this webinar, not just the apprentices, the brokers that I like, and some of the information off this webinar, because you stayed to the end, and that was my promise as well. As you sign up, let me know that you are in. John, HL6, no worries, as well, and to do that next time. Yeah, no worries, John, you're on the list. You can, remember, I'll keep in touch with you. Don't worry, you can start whenever you want. See, some people say, oh, I want to start next year. That's fine. You're in for life, and you're not having to pay for something constantly. You're in, so you've always got that knowledge that, oh, I've paid it, I'm in, I'll start later when I've got a bit more time, because it's lifetime mentoring and there's no cost to upgrades or anything like that, because we're not messing around. We want you to succeed. If you succeed, we get closer to a successful business. Okay, got dedicated websites. You can Skype me. Let me just show you all of this instead of telling you. So you go to www.alpeshpatel.com here. Okay. No, Gautam, the brokers that I suggest for newbies and later are the same. Okay, so you go here, as you can see, all currency pairs, but actually more than that, we were going to create a separate indicator for the indices for crypto, and we're beta testing that. But this, for the moment, you can use on everything as well. Lifetime mentoring, online training support, 25. Add to cart. Okay, yes, you can use PayPal if you want extra security. Go to the PayPal link. Okay. As well, there's no problems with that. You can go to the PayPal link. Gurjit, you are in. So is Stephanie, you are in. Oh, John. Oh, that's annoying. You didn't get the books. Okay, John. Right, I'm going to have to check up on that. John, will you email me? Yeah, it works in the US as well, Shashi. No problems. Actually, I'd say about 30% of users are in America. 70% are in UK, South Africa, Canada, Australia, Singapore, Hong Kong. Those are the major markets outside of there. Sweden, I think we've got France, Germany as well. I'm just trying to think what else. I think in Africa, the only place is South Africa, if I'm not mistaken. Might have Kenya, might have one or two in Kenya. Okay, so you've got this, you can fill it in. If you want to pay by American Express, you go via the PayPal link. I know it sounds odd. You don't need to have a PayPal account to pay by PayPal. Okay, it's just the payment processor. Oh, Shashi, we set it up for you. It's the same process for America as well. How do I access? Oh, Ovu, just drop me an email with the question so I don't lose it. So don't worry, don't worry. How do you decide on a TS that doesn't stop out too early? It's volatility based. So what we do is our algorithm looks at the volatility of any of these instruments, and before it plays the stop, it puts the stop loss at it puts the stop loss based on the volatility of the market. You can see there, look how the stop loss didn't get hit. The market was volatile, it got near it but didn't, and then moved away. Well, we don't want that further away, because what if the market completely retrade? No, Shashi, you don't need it on your Apple iPad. In fact, I only want it on your PC or laptop, please, my friend, as well. Shashi, we still have a few licenses left, so don't worry. And we have Judy or Francisco or Ed who can set it up for you over the phone for the US as well. We set it up for you, don't worry. It should take you 10 minutes to set it up, but if it takes you more than 10 minutes, we set it up for you, don't worry. People sometimes think, oh, I downloaded it, but I don't know how to do it. MT5, we're probably, MT4 is so ubiquitous. People use this alongside MT5 or TradeStation or any other piece of software, Bloomberg terminals, whatever, because MT4 is so ubiquitous. So we may well create an MT5 version, but if you're using MT5, fine, use it. Just put this, look at this on the screen next to it. Doesn't matter. Doesn't matter. Still trade off MT5 or trade off whichever broker you're using. It's fine. Eric, delighted you're in, my friend. I'm over the moon. We are going to make you crazy happy. That is my job with everyone. Don, good to see you back. Signed up. Brilliant. Don, message me. Fred, just drop me an email. Brokers, I'm going to email you, Fred. Trevor, trading. Not necessarily always in the market. It depends. If we can't find a good trade, Trevor, today, let's say we might not, and all of them might have exited. That rarely happens because we can go long or short as well. Doubling down just means increasing your position. So if whatever, let's say you bet £10, you put £20 and that's double down. Okay. I prefer, Zakira, the 30-minute and 1 hour chart as well. Welcome more of you who have got on board. Sachin, should beginners use leverage or is it too risky? It's not about the leverage. It's about how much could you lose of your overall trading risk capital if your stop loss is hit. Doesn't matter whether that was zero leverage or tons of leverage. The point is, how much will you actually lose if your stop loss is hit? And will you lose sleep over that amount? That's the point. I want you to, with the ESMA rules Richard Nagy asked me earlier, I think they're great. More people are going to be successful, okay, as a result, because they're going to be less leveraged. It forces them. And it's forced. Let me tell you on the inside, because I consulted the FCA on this. I wrote to them about this as an expert in the bloody field, okay? Don't forget, an expert in trading online. And I said to them, force the brokers to make more people profitable. But obviously, people, you can't just give them money away. It's got to be that they reduce leverage, for instance. They're crazy, that is. Okay, brilliant. Robin. Oh, yeah, of course, Robin. You don't have to place the trades the indicator's telling you. You can paper trade. You can demo trade. In fact, please do it that way. Alpesh, how do I know about the market, when to trade or sell without laptop or PC? I recommend, you know, laptops cost about £200. Sashi, get a £200 laptop. Okay, do it. It's worth it. It's worth it. Okay. So yeah, you go on here, PC or Mac. It can work on both, Stephen. No ongoing costs. Kabir, I've got a few more questions on my phone here, which have come through. Robert's asked, what about updates? All updates and upgrades are free for life. Do not worry. It is a 30-day, no quibble money back guarantee. You don't have to show me any trades. You don't have to send your trades. You know what some people do? They place the trades, they make the money back from the indicator, and then they ask for a refund. I don't care. Others, they say, oh, but you're going to take me longer than this. I'm out. I don't care. As long as you give it a shot, as long as you're genuine, you want to give it a shot, you want to learn. That's not all. Let me show you something really exciting. Okay, we've got a dedicated mentoring website. You know what I love about the mentoring website? You got to scroll to the bottom. Okay, you've got live chat on there, but scroll to, this is some of our licensees. Okay, and that's the people who do the IT support and help to install it if it takes you more than 10 minutes to install. Testimonials. Okay, I love the testimonials. That's fine. Okay, these are just regular people. And the lovely thing that you'd expect that. You know what I really love? And apprentices. Please remember this, apprentices. My office is 84 Brook Street. I always happy to see apprentices. Okay, that's my personal email for apprentices. You've got installation emails, you've got any installation problems, you've got a Skype call, you've got a 24/7 live call, direct line for apprentices only, please. US number, Hong Kong number, or Skype call. UK, US, Hong Kong, because we've got a lot of people from those areas. And follow me on LinkedIn, only if you're an apprentice. If you're an apprentice, follow me on LinkedIn. You'll see I'm the real deal, because you'll see who I'm connected to. You'll also see the other credentials that I have with my government work, with my asset management business, who endorses me. You'll see that, I don't know, the CEO of Barclays endorses me, and so on, the government, whatever else. Okay, you'll see our investors and everything else in there. So follow me on LinkedIn only, and I'll introduce you to anybody. It's a free network. Only if you're an apprentice, please. Only if you're an apprentice. You're also going to get a 30-day course if you want it, because you haven't done it. And remember, that's all part of the period. Okay, or the 30-day period. So you've got, and this is yours for life. You don't have to do it in 30 days. You can take as long as you want. It's yours for life. It goes through everything in modules, very structured. It's got test your knowledge, all done by me, review slides. All these videos are by me. They're short snippets, 9 minutes, 1 minute, 1 minute, so you can see progress, because that motivates people. We are psychologists on how do people learn fast, what makes them learn quicker, and we worked out bite size. We learned text and video. Some people like video, some people like text. We learned out all of these things were critical to getting them to learn. So what we do is we make sure with all these modules, all these 10 modules, you learn how to trade. Okay, and you get lots of updates on all of this as well, but it gets better than that. Okay, you also see as my apprentices every single day my daily updates. Okay, the trades that I like to handhold you. Okay, Sashi, do you know any good forex bro? Oh yeah, loads, Sashi. I'll tell you which ones we like. I'll email you as well. Do you download the links, etc., by mail after pay? Yeah, as soon as you've paid, you click on the link. As soon as you've paid, Eric, it should take you to the download page and your username and password. If it hasn't, don't worry, Eric, Barbara, Stephen, everybody who's signed up, I will email you from my personal email your personal login details as well straight after this webinar, so don't worry. Apprentices, you also get my monthly newsletters and every single day my trading updates, so you will see what we like, okay, what's trending, what the team, not necessarily just me, but might be one of my other team members, have picked in, because each morning they bid in what they like and what they want to see. So you'll see 30th of August 2018 top picks, euro, Canadian dollar, what we saw, okay, what we like the look of, what we didn't, where losses were made, as well as winning trades. You'll see both, okay, you'll always see both. Remember, we're just trying to make money, even if we're right 50-50, the wins make more than the losses. That's it. It's when people think you've got to be right every single trade that they go wrong. They completely go wrong. Okay, so every single day you'll see my trades. Every month you get my newsletter. That's not bad for apprentices. Every single day, that's all thrown in. Okay, and then there's a longer 12-week course as well if you want to do it. It's part of the mentoring. And do you know what I love in this? I'll tell you what I love. Every Saturday I give live webinars. Every single Saturday I give live webinars to my apprentices. 11 a.m. on stop losses, 12 o'clock on entries, 1 o'clock on limit orders. Okay. 2 o'clock on money management, 3 o'clock on trading psychology, and 4 o'clock on into winners. If you can't make it, don't worry, they're recorded. So you've got another way of keeping in touch. You've got Skype, email, live chat, webinars, and every single live event I give around the world, you'll be invited to. So if I'm talking in London, in Singapore, I'm going to be speaking in September. You'll get that as well. You'll get all of that. You also fill in a mentoring questionnaire. Okay, as an apprentice, I want you guys to have your socks blown off and say, oh my God, this is the greatest thing we've ever seen. What I do on this is you fill in your program questionnaire, because it's a bit like I'm your personal trainer. I want to know what your weaknesses are, what your strengths are, how experienced you are. So I don't just leave you in a classroom. This is one-to-one. So I can then work out, okay, this is your strength, these are your weaknesses, and what you need to focus on, where you need to go. That's what I do. I make sure I take you to those levels, where you need to go, what you're good at, what you're weak at. So it's bespoke to you, because the quicker I get you to profitability, the quicker we get to $1 billion valuation, because we validate the technology. If I just give you the technology and left you to it, a whole bunch of you will say, Alpesh, I can't even get past the download. And then it would look like we're not as brilliant as we are. I want to prove to you we're brilliant. Can't. Congratulations, you are through as well. I can see that's come up on my phone. Kabir's asked a good question. Kabir, I think you've been on before. Alpesh, I understand you're an expert. I'm a beginner. I've summarized this because it's on my phone. Can I use it as a beginner without much knowledge? Actually, it was created for beginners. The manual's there, but also for advanced people who want to improve their profitability. I'd say about 75% are total beginners, so don't worry about it. Femi, delighted you're on board. I'm going to make you ecstatically happy, not just with the training. There are 3 reasons people trade. Okay, only 3. 3 F's, write it down. Freedom, fulfillment, okay, funds or money. Okay, funds or money is the 3rd reason. It's the freedom it gives them. Okay, people, if I said to you, you've got to sit in front of a computer screen and be a screen slave all day long, you'd say, forget it, Alpesh, I don't want to trade. I had to liberate you and give you enough freedom. I had to make it fulfilling. In other words, I had to make sure you're not a screen slave, otherwise it wouldn't be fulfilling. If this whole process didn't work like that, you wouldn't use it. It's a bit like if Facebook was Yahoo, you wouldn't use it because nobody uses bloody Yahoo. My point is I had to make it more like Apple, less like, I don't know, Huawei or Samsung. I had to make it user-friendly. I had to make it more like Apple Mac and less like Windows PC, if you see what I mean. Okay, more of you as you sign up, let me know. I think we've got 5, I think we're down to 3 licenses available. Okay, let me know if there's any questions you've got. I can't imagine why anybody wouldn't be on, but if there's any questions, let me know. Okay, you can also, when I do my BBC bit, I sometimes meet my apprentices afterwards. You want to come and see me after I've been on air on the Beeb, you're more than welcome. I will also let apprentices know when I'm going to be on air, and you come and see me just outside the BBC, and we will talk the markets or whatever else. Okay, so it's absolutely fine. Robin, delighted you're in. My job is to use the profile that I have on TV to promote my software in the same way Richard Branson does. I tell you who my apprentices, not my apprentices, who my heroes are. Okay, believe it or not, Donald Trump for running The Apprentice, because he took a billionaire who took on apprentices. Jeff Bezos used to be a hedge fund manager, set up Amazon, $1 trillion company, entrepreneur, hedge fund manager, went into technology, billionaire. right? Steve Jobs, when he likes a product, when he was alive, he was the one who put his name to it. He's the one who said, look into my whites of my eyes, I like this. Put his name behind it, billionaire. Okay, Lord Sugar took on apprentices, billionaire. Do you see what I'm saying? All use their profile to promote what they believe in. It's my reputation at risk. I want to do that. Clive, yeah, fingers crossed. But you know what, Clive? Fingers don't need to be crossed. I'll tell you why. I'm a public figure. You've got a 30-day money-back guarantee, no quibble. Your fingers don't need to be crossed, okay? For that reason, you're taking a no-risk trade, okay? Let me put it this way. I've got a test for all of you to determine whether or not you're traders, right? Here's a test, trading test to see if you can be a trader. You've just been given a quantity of information, just like in the markets. The information is from a credible source, okay? It's independently verifiable. They've written for the FT and so on. Shashi, once you've ordered it, we'll give you the instructions on setting it up in the US. The US is where we've got 30% of clients. Let me know once you've ordered it, Shashi, and I'll set it up. We'll get our team to set it up for you. Don't worry, dead easy, okay? Is it independently verifiable? Yes. Do you go long? Do you buy that information and what it's telling you to buy? In this case, an indicator, sometimes telling you to buy euro dollar. What's the risk? What if the risk is guaranteed to be to zero and the upside is you make back the cost of the trade in 30 days? Then it's just a free annuity. It's just a free annuity income. What would you then do? Okay, what would you then do? Would you take the trade? Well, it's like any other trade. If you say no, Alpesh, after all you've told me, credible information, independently verifiable, zero risk because 30 days, can get it back, whatever, trading's not for you because you won't then place any of these trades anyway. Okay, I want you not to be a screen slave. I want you to trade for 15 minutes a day before and after work, use the indicator to fly, when to enter, when to exit, understand it's not a black box. It explains in the manual that I send you, but you've got me to contact anytime you don't understand something. You can contact me. People say, how do you manage your apprentices? Well, I limit them in numbers at any given time. When they're profitable, there's not an issue anyway, okay? And then you know what happens? I've got the emails. I've got a phone. Like most people, I'm not on Facebook. I might email back an apprentice who goes, oh, but you don't understand. So I go, oh, don't worry, look at this. And I'll create videos for them if I've not already done it. Clive, thank you very much, my friend. If you're in London, let's meet up. Zakir, I understand. Oh, you don't have to show me. If you want to, Zakir, don't worry. Don't worry. It's a no quibble money back guarantee. You don't have to show me any screenshots. You don't have to show me any trades you've placed. If you don't do anything, don't worry, my friend. You're not the only one in the position. I won't mention the position you're in. Don't worry, you're not the only one, and it's perfectly fine. Oh, don't worry, I'll email you, Eric, straight away. I've seen it go through, Eric, so you're through. If you didn't see the link, don't worry, we'll send it through. It could be a browser. I'll send you personally from my email account. After this webinar ends, give me 10 minutes to have a cup of tea, just to rest my voice, and just to close off any of the trades on here that my assistant wants me to close off on. We're still long Japanese yen. It's not the weekend, so we'll probably keep that short Japanese yen. But yeah, that's a good one at the moment. So we'll see. We've just doubled down on that. You did. Yeah, she did. She did double down on it. Thank you very much, dear. Yes, Robin, the brokers that I like. Okay, I'm going to email you them. I'll email you the ones that I like. Okay, Nick, what was the IPO looking to achieve? The point of the IPO is to raise capital to have a global offering of the software. So at the moment, it's only me. You guys will always have me as the lifetime mentor. But what I want to do is make it global, have mentors, teachers everywhere around the world. Okay, that's the aim of the IPO. And like any hedge fund, we want to get closer to $1 billion of assets under management. So the IPO will help us get closer to that. Clive, don't worry about setting up. We've got a team to help you set up. If it takes you more than 10 minutes, any of you who've signed up today, email us. Don't try and do it yourself. We'll just do it for you remotely. Nick, Robin, question. I have questions about which brokers to use. Would you advise using MT4 to find trades and using different platforms? Exactly correct. You're a genius. Robin, use MT4 like we've done to find the trades, but don't trade through MT4. It is disgustingly complicated, and this is all in the trading manual with the indicator. It is too complicated. What you do instead, my friend, you don't use MT4 for that. Delighted you redoubled your efforts. What you do instead is you can place through any broker. You mentioned CMC, that's fine. I know Peter Curtis. Okay, you might do your trades sitting in front of your computer screen, looking at the MT4, and then placing your trades there because you find it easier on there. And that's perfectly fine as well. Okay, so I hope everything that I've told you has just explained to you why you'd be a trader and what it would take. I want to get you to trading. Probably the best thing, we took 25 traders, okay, of our apprentice cohort. We should have taken more. 100 trades each they could do in anything they wanted, anything they wanted. Before the indicator, and we did an after. Before the indicator, they had a whole, and compared to after the indicator, the number of profitable trades that turned to a loss decreased substantially. Number of profitable trades that turned to a loss. They didn't even know they're supposed to monitor that. Did you know you can have a whole lot of profitable trades that turn to a loss and you go, oh, I didn't know when to get out. Okay, so that decreased. Obviously it decreased, which is good. The number of big losing trades, now you might say, hang on, Alpesh, why were there any? We monitor the results based on, even if people don't follow the indicator, but they should have done. It's a bit like when you drive a car. Even if it's not Volvo's fault, they still register a car crash, okay? Or a pilot error, okay? Because that's still, pilot error still means there's something about the system that they're not doing. So we even monitor it. So the number of big losing trades diminished to next to nothing. Why? Well, because the system tells you shouldn't have them. Okay, so you're getting, that's the value proposition, as somebody once asked me. So what's your value proposition? Okay, as well. Listen, guys, hope you're all in. Okay, anybody who isn't, let me know and I'll drop you, tell me your emails if you're on the edge and I'll drop you a special email to take you over the edge. Okay, any other questions? Just looking at the phone here, and I'll look at some of the trades actually. Let's look at some of the trades. Where are we? Where are we? We are getting at euro dollar. Have I got any more questions on the euro dollar? Have any of you asked me anything else about euro dollar? Yeah, shorter time frame. I don't normally trade the 15-minute. Johan, I don't normally trade the 15-minute, but if you want to look at it, this is the 15-minute and it's showing a long trade. We haven't done this one on euro dollar. Remember, I was showing you, I think, the 4-hour on euro dollar, which is the one we were in, not the early one. Okay, not the 15-minute one, but you wanted to have a look at shorter time frame. Somebody's asked me about Apple. Yeah, well, we rode the upward. We're now short Apple on the 5-minute bars. That's the 5-minute. I mean, I'm not saying you necessarily trade 5-minute, but if you're looking at longer term on Apple, then yeah, I mean, look, okay, look, longer term, here we go, Apple 30-minute bars. We've had this nice rally up since the 24th of August. I mean, that would make you the cost of it anyway. Zakir will hold that for you. Don't worry, I'll hold it for an hour or so. Okay, that make the cost of the indicator anyway. The whole point of the software is if people make their returns back, great. You know, in an ideal world, what I'd like to do is charge everybody a percentage of the profits they're going to make, but I can't. It's too complicated. It's too difficult to be able to charge people a percentage of the profits they would make. Because what if they don't use the indicator? What if they don't use it, claim they're using it, and then say to me, here's a percentage of the losses? Oh, okay. But so we just charge them a flat fee, because then we realized, hey, why not create the technology? A technology company which becomes $1 billion company instead. Top now, but want it on my laptop. Can I download in the morning? Yes, you can, Clive. We don't restrict how many machines you can put it on. And the reason is we're not messing around. We don't mind. Once you've got a license, you put it on a PC and a laptop. We sometimes have people who say, oh, can I share it with my wife or my best friend? And that's fine as well. Okay. Sashi, email me any other questions, Shashi, just in case I've not gone through them, because I will always go through questions. I don't have an issue with that. Sashi, I think you asked, you went short on the pound a moment ago. Yeah, let me show you our favored time frame, the 30 minutes. So we had the long trade down here. There you go, which went up, and then it's short. And yeah, you're in the same. I mean, you're in the same boat as us, short. So we got in earlier. So just be a bit careful on that. Vladislav, yes, Vladislav, are you an apprentice? Let me know quickly. Let me know if you're an apprentice and you've got the Skype call there. Not an issue. Thomas, working on Linux through Linux Wine. Yes, we've had, but I'd say about 2% of our users have used it on, because I know you've got Wine also for Apple Mac. But yes, we've had, I'd say about 2% only on Linux. Okay. Vladislav talking to me is apprentices. Thomas, have you done anyone working? Oh, you answered that. But email me, Vladislav. Email me. Okay, you've all got my email address, so don't worry about that. If you need to email me, guys, because you're still on the edge and you're not sure, look, feel free. I'm going to do something because you've stayed right to the end, because I'm going to finish the webinar now. There's an email address, my friend. Okay, use crossover Mac. It works fine. Thank you, Mike, my friend. Yes, indeed. But Linux is different, obviously, to Mac, isn't it? It's not the same operating system, obviously. I'm pretty sure. Forgive my ignorance on that. Yeah, Don, you asked the question just as I gave the question answer. So there we go. Listen, guys, if there's no more questions, I think I'm going to end it there. I want to thank you all, especially the apprentices. Apprentices, I want to blow your socks off. I want to make you happy beyond belief. Robert, I think I answered your question. I'm just scrolling through now, making sure I haven't missed anything. Updates are free for life. Mentoring is done by me and only me. For you guys in future, when we've got other people, they might do it, but you guys will always have me. What else have we got? It is a risk-free investment in that it's a no-quibble money-back guarantee. You've got 30 whole days, not 14, not 21. You've got 30 days. Okay, there's no upsells. You don't be told, oh, you're not profitable. You've got to pay for this, buy this, data cost this, this is extra. There's none of that bullshit. We need you to get the profitability. The more of you who are profitable, guess what? The more the word of mouth gets out. Okay. My pleasure, Stephen. Thank you very much. If you've enjoyed the webinar, please let me know. If there's anything I've missed, let me know. If there's anything you think I've not answered. Oh, Trevor, what was your question? How do I? Oh, you know why, Trevor? Because you put it in the Q&A. I apologize. How do I watch recording of this? Trevor, I'm going to email it to you. Check your inbox as well. Do you have MT4 Money Management Expert Advisor or Indicator? The money management's already on there. It tells you on the body of it, Trevor. Brilliant question. How do you determine the trends on day in terms of currency correlation, strongest and weakest FX pairs? You're going to see what my daily trades are, which is going to give you a pretty good idea. But what you're going to see, so you're going to see what we're monitoring. But what you're also going to see, Trevor, quite a few questions, sorry. What was the result of the Trump impeachment? 74%, Trevor, said he will be impeached. He won't be, his Teflon Dom. Okay. How do we watch a recording? I've told you. Money management, it tells you. Look at this. See that? It tells you what trade size and what risk you're taking. Sorry, it's not clear. It's clearer when you download it. Okay, it tells you where to put stop loss, where to add to your winning position or take profit if you want to keep it simple and never add to it. Well, it tells you if you did £5.56 per point, then if the stop loss was hit, you'd lose £100. So you might say, I don't want to lose £100. So then you might say, oh, I'll do £1 a point. It gives you the mathematics of it. And the money management already embedded in Trevor. It's already in there. It also tells you where the stop loss is by number, visually and textually. Tells you where to add to a winner, so you can tell the broker, I want to add to my winner there. All the Q&A, all the course will tell you. Thank you, EarthG and Kate. Zakir, delighted you are in, my friend. Bernie, Trump 2020. I know, can you believe it? Whatever happens, whether he gets in or not, I'm not going to be political here. All I'll tell you is the markets are going to move, baby. And I want to get on those trends. I don't know what's going to happen with Brexit. I don't know what's going to happen with Trump. What I do know is the only thing that can possibly work is trying to get in on the trends. Because look what's happening. Suddenly sterling rises. Yeah, then it falls. I can't rely on my own expertise to work that out. I can only rely on the expertise I use to create an algorithm which tells me there is now a trend by using multiple indicators, multiple time frames, flat to rising, and price confirmation. An expert, and a Nobel Prize was given for this, is more accurate when using an algorithm than their own judgment. Humans are fallible. Algorithms are not. I know it sounds crazy. Google this stuff. There's a brilliant book by Michael Lewis, who wrote Liar's Poker. He's written a book called The Unfounding Project. Please read it. It's the greatest book I've read in finance in about 10 years. Just read it. Okay. What you teach can I use with options? Stephen, you can, because we're showing you where the trend is. So when you see that the trend direction is upwards, you can go long calls. You might short puts. You might do a bear call. You might do a calendar spread. But you can convert it all into options. If you need help on how to convert it into options, I'll do that one-to-one with you, because you're the only one who's ever asked, believe it or not, at 600 people. Well, no, you know, others have asked, but they never asked for direct help, and I can do you that as well. So anyway, listen, we've got a whole bunch of people. I think we've got a couple of licenses left. Thank you all for being on. I really appreciate it. What I'm going to do is I want you to get on. I want you to start trading. I want you to trade, paper trade, or don't use live cash, paper trade. Okay, use a demo account. Then use the smallest possible amount of live cash. There's no rush. Nobody's switching the market off. Nobody's switching the market off. Okay. Thank you, my friend. Thank you, Nick. I hope you liked the energy. I hope you liked it all. Really appreciate you all staying right to the end of all of this. I'm going to turn the screen share off so you can see me. Thank you all. I'm going to go home now. I believe we've created $1 billion piece of technology. I don't see why it shouldn't be worth $1 billion, given that the companies that make this are, because it's got utility, it's got usefulness. So why shouldn't it be? Okay. And that's why I'm willing to say to people, I will mentor them for the rest of my life. If they need it, they don't need it. That's why I can offer that. Okay. And that's why I give them a 30-day money back guarantee. So they've got ample time to look at it, observe it, trade it, even make the money back off it. Because even if they made money and asked for their money back, guess what? They're still a fan. Trust me, when you're going on $1 billion journey, you want to just create fans. The job is to create fans. Okay. And that's my job. Okay. Thank you all very much. I will leave you with the closing slide of that. And I want to thank everybody who's been on this and been on the webinar. Really, and all the apprentices, love you all. Thank you very much. Sanjit, you are in as well. Tom, sorry, one last question. How do you pick a time frame? How do you pick a stop loss when to add to a profitable position? Whilst the indicator shows you all of that, and so does the manual I give you, you've also got access to me and the online materials. But most importantly, you're going to email me in case you can't be bothered finding them. Trevor, I do know him. I'd say we're friends. Yeah, I know Sandy, and we're friends. Yeah. I know. I don't know what he's doing at the moment. I bumped into him in Hong Kong last. I think he was working for a broker in Hong Kong. But yeah, I bumped into him in Hong Kong. But yeah, I'd call him a friend. He's on my WhatsApp. Okay. We bumped into each other when he was working for another broker in 1997, and I've forgotten the name of the broker. FinSpreads, I think he was working for back then. And then he moved. He was working for City Index, I think, doing some of their educational materials. So met him back then through all of those. Yeah. But yeah, I think he's working for a Chinese brokerage. Because I think in China, the last thing I remember in time is you get a room full of like loads of people, and so the brokerages were keen to have him speak to them because they've got clients that want to onboard into the brokerage. Saturday webinars are for apprentices only. There's 6 webinars every Saturday, but you can still email me even if you can't make the webinars and they're recorded. Okay, as well, I've got one more from Bernie. Who works full time and he wants to know, can he really use it by just using it for an hour or 2 a week? Actually, you can spend more time, but it was made for people who got full-time jobs. Think about it. We want to have the biggest possible global market. We can't do that if we say to people, you can only use this if you give up your day job. Can you imagine? I'd be telling people to all hand in their resignations. They wouldn't do it. I want them to have a day job. I want them to just do this on the side. I want them first to just learn and decide if it's for them. The best thing that can come out of tonight is you work out whether or not this is for you. All apprentices, I'm about to email you all. Keep an eye on your spam and your inbox. I'm going to email you all your login details again and how to access the 30-day course, the 12-week course, all your login details for all of that, and my personal details. So you've got all of that again, so it's in your inbox as well. Thank you all very much. Thanks, everybody, for being on this webinar.